All right, what's up, y'all? Hope you're having a good day. What's up for y'all watching this on the YouTube replay? I got a good one for you. Our portfolio did hit a new all-time high today, which is pretty cool. So, hold on here. I just disconnect from the oopsie. Oh well, hold on one second here. What's up, y'all? So the market is doing pretty decent today. I mean, we're barely up. We're up 0.1%. Here's my dividend growth portfolio, mainly led by Constellation Energy and Google. I mean, Google's having a pretty good day, up 1.35. We look at the SPY, the S&P 500, it's down zero point 0.3. The Qs are almost green. Tech-heavy Qs are almost green, down 0.08, but we are green on the day slightly. What about our Roth IRA? We are down in our Roth IRA. We did just buy a couple more shares of BRX, so we have 14 shares of Bricks more, but how's this doing all time? Year to date, we're up 13. We started this basically a year ago, so up 15% in the Roth IRA all time. And then we have our Moomoo portfolio. Why is Visa dropping? Hey, what's up, y'all? We'll check out the stocks here in a second. We'll check them out. And hey, Jello, how's it going? So here's my buy and hold portfolio. We're also at a new all-time high in this account today, up 0.31%. The stock that's been an absolute winner has been Comfort Systems, since the bottom down here. I mean, they're up like 60, 70%, which is crazy. Another one is like Amphenol Group. This is another stock we were loading the boat on down there, right in the April dip, and then it just continues to be a winner. Amazon, I think they're at a new 52-week high today. Look at that. Yeah, that's a nice candlestick. Amazon's doing pretty good. They're such an innovative company. They have their Prime Day and stuff. But yeah, Coca-Cola Consolidated, this is another stock I'm thinking about buying another share of today. I might do that. I did buy a share 2 days ago. And then also my Webull account right here. We are down on the day slightly in here. And if we go to all time, we were up 10% in this portfolio. So, hey, not too shabby. And let's see what's up on the day. Yeah, ticker symbol FUTU has been, they're a fintech. They've been doing really good. Check that out. We now own 8 shares of them. They're a fintech. We have a lot of fintechs in here, like a SoFi. Dude, SoFi as well. Look, all the fintechs have been crushing it. Look at SoFi right here. They're at a new 52-week high. So, actually, I want to look at SoFi real quick, and then we'll look at Visa, and then we'll look at some of the other stocks you guys have in the chat here. My portfolio is 50% Hood, and it's printing. Yo, wait. Also, let's go look at Robinhood real quick. Hold on. SoFi, yeah, dude, Robinhood. No way, we're up 624. They're over 100. Dude, Amazon holding the over $100 is a great psychological level. So yeah, that's an all-time high. They technically hit an all-time high today on Robinhood. So they've just been, all the fintechs have been crushing it. So let me go over SoFi real quick. Then we'll look at Visa and we'll look at Target. Yeah, what's up, guys? So here's SoFi right here. They're a fintech. They have their own banking charter. They mostly do loans and lending, like student loans and stuff. But I love them for their financial services business, which is 40% of the business now. The growth here is what I really mean. Like if I'm going to put my money in a stock, I'm going to, I want to buy one that has great growing fundamentals. And look at this. I mean, their financial services is up 101% year over year. It's literally doubled from the previous year. If you go to it on an annual basis, literally in 2020, the sales were 11 million, nothing burger. And now it's 821 million for the full year of 2024. So, and it's 300 million just in the most recent quarter. And people are taking SoFi serious. They're making a lot of net income every quarter. They're actually profitable. And if we zoom out to last year, people were like, I think I'll stay away from SoFi. They're losing money every quarter, but now people are taking them serious. They're making money every quarter, kind of like Robinhood now. Robinhood used to lose hundreds of millions of dollars. And now, actually, I'll show you that real quick. Yeah, if we look at Robinhood right here, this is why they've done so good. I mean, we zoom out to when they IPO'd. I mean, who could buy this stock? I mean, they were losing hundreds of millions in net income a quarter, and now they've really turned things around with their like gold subscription or whatever. They're making hundreds of millions, and the sales are just growing. It's crazy. They're so innovative. So, how has SoFi not seen a massive pullback? It's just momentum right now. We're in a bull market, I guess they kind of just follow Bitcoin. SoFi just gave people access to invest in like OpenAI and SpaceX. They're innovating too, which is pretty cool. PSIX is up 2% on the day, not bad. So let's go look at Visa. Someone's been saying this one in the chat. I got you. We'll check it out. So Visa, they're down 2.4% on the day. That's no big deal. I don't know if there's any specific news here. Apple, Visa, MasterCard win dismissal of merchant antitrust lawsuit. I remember that being a big one. They have Visa and MasterCard literally have a shared duopoly on the credit card payment processors. This is a stock you probably just want to hold for the long run. They're going to take advantage of the, uh, crypto industry. But look at this right here. They have a nice dividend. They grow their dividend every year. If we go to the net income right here, I mean, look at that. They're making over 4 to 5 billion of net income every quarter. That's incredible. Those small little transaction fees that are slowly bankrupting us are making Visa a lot of dollar holla. So, what do you think's a better hold, SoFi or Hood? Yo, the answer's kind of both. I mean, I love both of those companies, and I do own both, but probably SoFi is a little. I think SoFi is probably less expensive than Robinhood. Robinhood is pretty expensive right now. I'm certainly not buying Robinhood over 100. But SoFi, maybe if you can get this one around $20 or even under 20, that not that'd be all right. I have 1,000. How much Bitcoin should I buy? Yo, Andrew, I don't know if I'd buy Bitcoin at all-time highs today. So Ryan said SMCI. Yo, Supermicro, did they install the server racks for you? We do own some Supermicro. I can't believe it. We really have 90%. I bought them when they were facing, does anyone remember? They had like this accounting. What the heck? Okay. They had like this accounting fraud and the stock tanked on this day. There was no earnings or anything. They didn't report their earnings in time. So if you look, there's a huge gap of look, here's one earnings report and here's the other one. There's so many candlesticks. They should have had other earnings reports. Anywho, the stock's done great ever since then. The growth, they just had a $10 billion partnership with DataVolt. I mean, there's a lot of earnings tailwinds here, but the margins have kind of collapsed. But good news, they are still making net income every quarter, which is good. But yeah, I'd be careful buying Supermicro probably at this price right here. All right, let's see. IoT, Heyo stock, huh? Let's go back over here. Let's see. IoT stock. So what is, Samsara. I have this one on my watch list actually. I think I like this one. So I'll give you my honest analysis on them. Let's go check them out. What's the market cap? A $21 billion company. So hey, look at that's the price to sales. That's not the PE. What's the PE? Okay, so they are losing money right now. So let me go check that. So they have a negative PE. Okay, so the trend has dramatically increased. So they're losing 60% less money than the previous year. So yeah, look at that. Used to lose a lot more money. So maybe this time next year they'll actually be profitable. And wow, look at that revenue growth. That's very good. Up 30% from the previous year. That's very solid growth. Really good balance sheet. They're deleveraging. Free cash flows exploding at FCF right here. Yeah, look at the free cash flows up 145%. So yeah, I have this one on my watches. I think they're pretty decent, and probably this time next year they'll probably be profitable. So let's see. Evan said SYTA, please. All right, let's check it out, man. So so we don't really cover these kind of stocks on here. If you look in the top right, here's why. I mean, they're a $38 million company. At this point, you're not even investing. So this stock's literally at an all-time low. The whole company is worth $38 million. I mean, maybe you could do some fun little swing trade or short-term trade on them, but this isn't really a stock that I'd want to hold for the long run. Let's see. They're losing net income every quarter. The sales are nothing. 2 million of sales. I mean, and then nothing's really blowing me away here. It's like a buy and hold stock there. Yo, what up, Jacob? We saw AMD and NVIDIA. You know what? We'll look at NVIDIA first, then we'll look at AMD, because I do own some AMD. I might be biased. And AMD has not kept up with NVIDIA because NVIDIA is at an all-time high today. So congrats if you've ever bought NVIDIA. You're definitely up on your money. So we have right now NVIDIA at a literal all-time high. The market cap is over $4 trillion. That's actually, their market cap is 3.6% of global GDP. Isn't that crazy? So NVIDIA is actually huge. So anyway, let's go look at some of the fundamentals here because I like looking at how they're doing. So here's their PC GPU market share. They have a 20% GPU market share. Obviously, we knew that. They're big in the data center business, like if you look right here. But the main reason I like NVIDIA is like they're just printing money. I mean, look at this bottom line. This is after-tax net income. I mean, they're making 15 to 20 billion, 20 billion plus of net income a quarter. So yeah, incredibly profitable company, monster balance sheet. The free cash flow was up 80% year over year. So NVIDIA is just a winner, man. All right, let's see. Top 3 dividends. I don't know. I have a whole portfolio here. I'll show you this really, really quickly. I'm gonna go back to this. This portfolio right here is my dividend growth portfolio. Every stock in here pays a dividend. Yo, Dante, no way, homie. I appreciate the roses, bro. Yeah, if you got a stock you want me to look at. Oh, he said SRFM. Is that Sprouts Farmers Market? I don't think so. Wait, Dante said SRFM. Let's check it out right here. And sorry for the lag. The screencast isn't working as well as I want it to right now. Have you seen SoFi? It's been skyrocketing. Yeah, Michael, dude, I do own some SoFi, and SoFi's at a new 52-week high today, or multi-year high. So Surf Air Mobility, they're up 25% on the day. Nice. Oh yeah, but really small company. They're only worth 320 million. So again, not that. If you look in the top right, market cap, they're worth 319 mil. I just it's hard to trust, like a lot of money in these kind of companies. It doesn't take much to move them, but they are up 25% on the day. So congrats if you own shares before today. Um, yeah, it looks like the revenue. Hold on right here. If we go to their revenue, it's a little choppy, but the revenue did double from 2023 to 2024. The revenue did double. So I guess that's the good news here. EPS. Yeah. Wait, they made net income last quarter. Was that right? Yeah, technically, yeah, they made a million. Ooh, but look at that balance sheet. Yeah, anyway, I'd be very careful with that kind of company. Shopify, yo, dude, I love Shopify. You know what? If we go to Kathy Wood's portfolio, she owns some Shopify, and I really love Shopify because it's a growth beast. Yo, Sean Union for the 8 roses, bro. Thank you so much, homie. We'll check out Taiwan Semi after this. Yes, sir. Oh, hey, Troy, if you go to the link tree in my bio, the first link there, Troy. But anyway, here's if you want to get this brokerage that I'm on. But anyway, let's look at Shopify right here. And hey, thanks again, C Union or Sean, for all the roses, bro. I really appreciate that. Another 5 roses. Thank you, bro. So here's Shopify right here. And then we'll look at Taiwan Semi. Um, I really like this one just because of the growth here. So if we look at their annual sales right here, I mean, this is incredible. I mean, in 2018, 1.58 billion. Now for the full year 2024, it was 8.8 billion. I mean, that's incredible sales right there. So the growth is why I love Shopify. And if we go like the metrics right here, like FCF, free cash flow, it's up 56% from the previous year. I love the free cash flow and the net income. So I do like Shopify as a growth name. So let's go look at Taiwan Semi right here. And hey, Limitless, no way, dude. Thanks for the 3 lightning bolts there. And Sean, no way for the perfume bottle. I don't know what that is, but thank you, bro. So yeah, here's Taiwan Semi right here. A lot of people like this one more than Nvidia because they pay a nice dividend. So even if you buy this stock right now, it appears to be at all-time highs. You still get a nice yield. Check this out, an over 1% dividend. Because if you go to Nvidia, you don't get a dividend pretty much. And the PE is still kind of fair. I mean, the PE ratio is a 27, which means you're trading at 27 times net income. Pretty fair. They make these 5 nanometer wafer chips, like these really tiny wafer chips, and look at the market share. Literally is at 67% now when it was just at 61%. So incredible. And the bottom line here, the actual net income, they literally made 10 billion the most recent quarter, 11 billion the quarter before, 10 billion. I mean, they're just making a boatload of money. Great balance sheet, great cash flow. So yeah, they're just a nice semiconductor play. Yo, let's see here. Yeah, hey, Limitless or Dante, let me know if you got another stock you want me to look at. Let me know. I'm sorry if I missed it. But Michael said, can we analyze Adobe? Yeah, dude, I use Adobe products almost daily. Like I'm always on Photoshop or After Effects working on a thumbnail or something. Hey, if y'all want to support me, by the way, only way to support me, go subscribe to my YouTube channel. It's called Nathan Robert. I make stock portfolio updates and all that stock analysis videos. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. Dude, I might have to end the stream here. I really hope I don't have to. Okay, here we go. So here's Adobe right here. So I'm at a hotel and this Wi-Fi, dude, I kid you not, it's terrible. I still wanted to stream anyway. But anyway, here's Adobe right here. The stock has not done too good. I mean, look at that. It's really just the thesis that's being hurt because the financials look really good, but the thesis is being hurt. Like I know someone that just used like ChatGPT to make a logo for their like profile, and it looked great, dude. That logo looked great. I was impressed. And anyway, look at the PE on this company. It's a 23. That's a very low valuation for Adobe. And they're still growing. Like, look, if you look at the digital media business, which is 74% of the business, look at it. It's still growing. It's growing double digits. It's hit a new record. I mean, if you look at the annual growth, I mean, look at that. It's a new record every year. And if we go to the net income right here, I mean, they're making a boatload of money. 1.6, 1.8 billion of net income every quarter. The free cash flow is even better. They're making easily over 2 billion of free cash flow a quarter. So for right now, I love Adobe's financials. It's their thesis is being hurt though, kind of like a Google right now. Google is like very undervalued. Yo, Colomer, what's up, dude? He said, take a peek at DSWL. Also a huge fan of Taiwan Semi. Yeah, dude, Taiwan Semi's great. So yeah, really small company here. And yo, Sean, thanks for the donut, dude. I didn't see that. We'll look at Costco. Yes, sir. Oh, and we'll look at SoFi too. So, Despo Industries, $44 million company. So very small company, not one I'd uh, probably put a lot of money in. So electric products is what they make. They're making net income. So they are losing money every quarter. And the sales are up 3% year over year. So nothing's really blowing me away there. Um, so let's see. Yeah, we'll look at Costco, dude. Yeah, I got you. And then we'll look at SoFi because, dude, SoFi's at a new 52-week high. A lot of the fintechs are like a Robinhood, a Futu. The fintechs are doing pretty good today. So anyway, here's Costco right here. I love their business model. You know, they're a grocery store, and you have to have a subscription to get into the store. So they have that reoccurring high margin subscription revenue. And then the consumers also buy stuff in bulk. Like whenever you go to Costco, you buy stuff in bulk, and consumers feel like you get a good deal, and you do. And look at this, they're making a boatload of money. I mean, the margins aren't crazy, but they're literally making 2 billion of net income a quarter pretty much, which is insane. And then they also pay a dividend, a small 0.5% yield, but still they pay a dividend. I know they sometimes do some stock buybacks, but the stock has been always at all-time highs, so it's tough for them to buy back stocks. So they're actually doing special dividends. So let's look at SoFi right here. Yeah, then we'll look at Meta or Google. Yeah, let's look at Google after this. Um, let's see. So SoFi right here. Yeah, look at this candlestick. This is incredible. So new 52-week high today on SoFi, and that's because the business is just growing. I mean, if we look at their financial services, obviously they're a fintech, they have their own banking charter and everything. Their financial services business has literally doubled. It's up 101% from the previous year, literally 300 million just in the most recent quarter. You know, if we go to the full year, you know, in 2022, the full year revenue was 167. Well, now it's 300 million just in the past 3 months. So anyway, the financial services has seen some incredible growth. They're also making net income every quarter when they used to lose net income every quarter. So people are really starting to take SoFi serious. Here, I'll show you my position in them really quickly. I'll show you my other fintechs as well. Yeah, I got this one's up crazy. Futu's up 4% on the day. SoFi, man, we're up 263% on them. I sold a lot of shares a while back, but I've owned SoFi. Let's see, I bought this stock. Was it on this dip right here? Yeah, it was right here. Look, and in January 2023 is when I bought my SoFi, and I really haven't touched it since. So SoFi's just one I really like. Robinhood as well. Robinhood's at a new 52-week high today. Futu as well, man. This one pays special dividends. I actually just made a YouTube video about this stock. Actually, I made the YouTube video to buy this stock when it was at like 123. So yeah, SoFi's been doing great. Oh yeah, Target, and we'll look at Target after this too. I want to get to all the stocks here. Sorry if I don't get to all of them. Yo, Sean said he bought SoFi at $4. No way, dude. Yeah, hey Nash, if you go to the link tree in my bio, the first link there, you can see this app you can get the app I'm on. First link there. It's a brokerage. But anyway, the Google is trading at such a low valuation. I mean, Google's trading at a 20 PE, which means they trade at 20 times net income. Very low, very fair. You know, they're in search. You know, they own YouTube, they own Android and the Google Play Store. So all the fees that come from that, they are in quantum. They're going to be the industry leader for quantum. They have the money and the talent, and they own Waymo. If anyone's heard of Waymo, it's like a Tesla competitor. So anyway, revenue's up 12% year over year on Google, but the net income is up 45%. So what does that mean in English? You know, that means they're growing their net margins. So net margins is now at 38%. I mean, this is incredible. So again, their thesis is being heard here. Like if ChatGPT makes their own search engine or whatever, Google search revenues are going to get, their market share is going to get taken away. But for right now, Google's doing amazing, and I do own that one. I just hold them for the long run. So yeah, let's look at Target right here. Oh, Palantir, BRKB. Remind me to look at these. I want to look at them. Oh, and DataDog, didn't they just get added into the S&P 500? So here's Target right here. They're flat. They're up 0.00% on the day. That's weird. Anyway, let's go see. I know this is a big dividend play. So look at this. If we go to the dividend, yeah, you get a 4.3% dividend, and the payout ratio is only a 50%. So actually, Target has some room to raise their dividend. Here's why. If we look at Target stock, they've been hurt more than like a Walmart or a Costco because they sell more discretionary items. Like you're not just buying your groceries there. You'll maybe buy some apparel, like some clothing or some home furnishing stuff. In this other more discretionary stuff that gets hurt. So anyway, if we go to the net income right here, it's still really strong, and this is how they can afford the dividend. I mean, Target still makes nearly $1 billion of net income every quarter, but Yeah, the sales are down 2.8% year over year. So like the lifeblood of the company, the sales are decreasing down 3. So that might be why the PE is really low. All right. Oh yeah, I want to look at BRK. So this is Berkshire Hathaway. So this is Warren Buffett's company. Warren Buffett did just step down, and dang, look at that. So as we know, the S&P 500 is at an all-time high right now. But look at Berkshire Hathaway. They're like quite a bit off all-time highs, which is a bit strange. Maybe it's just Buffett selling, but I don't know. Look at this right here. If anyone's heard of Geico, Geico is wholly owned by Berkshire Hathaway, and that's 29% of the revenue. They're a very diversified business, of course. They're kind of like an ETF, basically. They're in all these other businesses. They're in railroads. They own Dairy Queen, for example. If anyone's heard of Dairy Queen, that restaurant, they just completely own them. Yeah, they don't do any dividends, but the net income they make is mostly returned in stock buybacks, giving you more ownership. Anyway, Berkshire Hathaway historically outperforms the S&P 500, but they haven't lately, which is a little weird. I'm down so much on them. Yo, Nate, what's up, dude? What are you talking about? Berkshire Hathaway? You're down on them? That one I wouldn't be too concerned about because that one hopefully should recover in the long run. Let's see. Oh yeah, DataDog, I guess. Yeah. So DataDog, this company, they're a cybersecurity company. I believe they just got added into the S&P 500, which is pretty cool. So if we can get it to load here, again, I'm on this hotel Wi-Fi. Hey, hopefully I don't have to. Hopefully it won't be an issue. But if y'all want to help me out, don't forget to hit the like button and follow if you're new because we go live every day, twice a day, and we just look at stocks and stuff. I sell nothing. I don't have a course, a book. I'm literally just on here giving my opinion. So anyway, here's Datadog right here. They had a huge candlestick. Wow, so they've really sold off a lot of the S&P 500 inclusion gains. So let's go see. So how is the business doing? So they are making net income every quarter, but the net income did fall 42% from the previous year. So do beware of that. But the sales growth is incredible. Yeah, look at that. Revenue's up 25% from the previous year. So very nice revenue growth. Net income did fall a little bit, but anyway, that's no big deal because they're in high growth mode. So I do like Datadog. I don't know about the valuation right now though. They're holding so much cash. Oh yeah, dude, Berkshire Hathaway holds like 100 billion of cash or something. Google has like 80 billion of net cash, which is crazy. So, yo, Adrian, how's it going, brother? He said LAES stock. So I think this is like one of the quantum momentum names right here. So yeah, dang, look at that. They went from 50 cents to $11 a couple months ago. Let's see how they're doing now. So semiconductors. Okay, so they're in the semiconductor industry. Do they have any sales? So if we go to revenue, so for the full year 2024, they did 11 million of sales. Not much. And they lost 21 million on that. But if you're wondering what just happened to their balance sheet, how they gained so much cash when the business, definitely didn't provide that. Well, it's because when all this happened right here, they decided to issue a bunch of shares and really fortify their balance sheet. So that takes away any bankruptcy risk, which is good. But yeah, nothing's really blowing me away here. I mean, the sales are nothing. They're losing money. I mean, they lost 20 mil. And they're worth 420 mil. Yikes. So they lost 5% of the whole market cap. I'd be careful with that one. What's a reliable stock you put money into today? First off, I'd probably diversify it. Probably easy answer is just the S&P 500. But here's what I have literally been buying. Here are my most recent purchases. Again, not financial advice here. I'll just show you what I've been buying. I've been loading up on dollar cost averaging into them. But I bought some Coca-Cola Consolidated 2 days ago on the candle. And my newest holding is actually let me pull it. Progressive Corp right here. Ticker symbol PGR. Incredible growth on Progressive. My second most recent purchase is PSIX, Power Solutions, and then T-Mobile. I actually really like the fundamentals there on T-Mobile. And I actually just made a YouTube video going over Progressive, PSIX, and ticker symbol FUTU. I just made a YouTube video about it 2 days ago. So if you want to check it out, it really helped me. YouTube channel is called Nathan Robert, Linktree in bio. So let's go look at some more. Yo. Oh, here we go. Chief said ABBV. Yo, I'm reading both the YouTube and the TikTok chat. So, watch John Deere. Can you look at Zeta? Yo, B Mills, how's it going, dude? So yeah, AbbVie right here. This is like a never sell stock. You want to just buy and hold this one. You get a nice like 3% dividend. I think they own Sky Rizzy, I believe. Well, let's just go find out. So yeah, first off, crazy dividend, a 3.3% dividend, even if you buy this stock right now. So yeah, basically this is a healthcare company. They sell a bunch of different prescriptions. And look at this, Sky Rizzy, the growth here has been incredible. I mean, it's up 71% from the previous year. That is incredible growth. I mean, look at this. this is why the stock has done so good. And that's just one of their little prescriptions. I mean, they have like, how's Renvoc? I don't know what that is, but look, it's up 57% from the previous year. I mean, this is incredible growth on AbbVie. So that's why I like that one. Do you look at technicals for an entry? Not really. I mean, I just look for if it's a great company, all dollar cost average into it. I mean, I'll look for it to be kind of oversold. I don't want to buy it at all time highs. But again, even you want to make sure you're buying a high quality stock. Always do your own research. You could end up with a stock like this where your dollar cost averaging into it, but it just keeps going lower. So, and there's stocks like that, like a Lucid. Oh yeah, hey, thanks, Jello. Yeah, if you want to get this app I'm on, it's in the link tree in my bio. It's the very first link there. Let's see. Uh, John Deere. Let's look at that one. So is that DR? I don't know the ticker symbol. Or is it DE? I think the ticker symbol might be DE. Yeah, Deere Corp. So yeah, John Deere. They basically make these tractors with their software, this high margin software that they sell. They can like harvest all of your crops for you, like without a human. So it's almost like a robotics play here. Look at the PE. So it's a not expensive company. Well, historically it might be a little expensive, but a 25 PE or 24 PE, pretty fair. Production, precision, small agriculture. I like how diversified that they are. Construction and forestry. So basically, if we go to the net income right here, it is. Oh, I didn't realize that it's down 23% from the previous year. I didn't expect that. I mean, the stock doesn't care. It's at all-time highs anyway. But that is weird that the net income is kind of fallen so much on John Deere. But the PE is still a 24 despite the net income declining. Maybe that means there was some kind of one-time adjustments there. Well, yeah. How do you feel about SoFi? Yeah, we looked at SoFi a couple of times already, bro. I love them, but I don't know if I'd buy them over $21. If I'd like to buy them closer to 20 or under 20. I do own them though. I'm not adding to my position. Hogus said, SLP, please. We'll check it out for you, brother. What's up? So, yeah, not usually a kind of company we cover on this channel, but they're a $300 million company and they're at all-time lows. So let's go look in the financials and see if we can figure out why this stock is at an all-time low. So software, services, let's see. So the revenue is up 22% year over year. Good revenue growth. They are net income positive, which is good, but net income did fall 22%. They have a really good balance sheet. Hold up. No debt and $21 million of cash. Their cash just fell, but I don't know why the stock has been hit so much. I don't know. Might have got to do some more research on that one because I don't think, there's no earnings on this day. I think there was like some other bad news. I don't know. So I wish I could give you more context on that one. Oh yeah, let's go look at Zeta right here. So there's Meta and then there's Zeta. Oh, yo, what up? We'll look at AB. Yeah, hey, life is necessary. If you go to the link in the description here, I'll pull. I don't know if you can. It's in that link tree right there. It's the very first link there if you want to get this brokerage app that I'm on. So anyway, here's Zeta right here. The stock actually, I do have this one on my watch list because I do like the fundamentals. The fundamentals are actually very good here in my opinion. So if we look at the sales right here, it's seen some really nice growth. The sales are up 35% from the previous year. And if we go to the net income, I mean, they're going to be net income positive like this time next year. They're losing 45% less net income than the previous year. Free cash flow is off the chain on this one. So all the fundamentals I see are really good. They're growing. They're going to be profitable soon. The free cash flow's up. So I wonder why that one's been hurt. Let's see. Can you check AB? Is that AllianceBernstein? So I think this is an MLP. So I do believe if you buy this stock, it gives you a K1 tax form. So I would be careful with AB. Hey, Jella said she bought some Zeta today. Nice. So AB, AllianceBernstein, they are an MLP, I believe. They give you K1 tax form. But here's why people like this one is because of the huge yield you get. And it's an 8% dividend yield, and it's actually sustainable because they're an MLP. So they can't afford that. They're making net income every quarter. And I do believe if I go to Nancy Pelosi's portfolio, these are super investors right here. Warren Buffett, Nancy Pelosi, by SEC law, they have to make all their trades public. And I think she bought some AllianceBernstein. I don't really want to go through here and check, but oh, it was right there. I saw it at the bottom. So anyway, it's a brokerage life. What's up? It's an app. Yeah, you can get to. Let's see. KSPI is one of the craziest. Let's see. KSPI stock. What's this one? KSPI. I have not heard of this company, but Collimer says one of the craziest value plays I've ever seen. So, wow, they're a big market cap, a $15 billion company. But yeah, look at that. The stock has not done too good recently. So this is, I don't know, what is KZT? Reporting currency. There's no flag, so it's hard for me to tell. But anyway, we're going to switch their currency to US dollars. Yeah, if we go to, so it's from Kazakhstan. I'm probably pronouncing that a little wrong, but that's where most of all the revenue comes from that country, 99% of it. So they're probably just like their version of Amazon or something. They have a marketplace, a fintech, payments. So yeah, if we go to the net income, they're making a boatload of money, and this is in US dollars. They're making 2 billion of net income a year. And what was the market cap? 15 billion. So yeah, this is a very low valuation. They're trading at a 7 PE. So that's interesting. Wonder how the tariffs will affect them. What about Sezzle and Dave? Yeah, hey, you know what? We'll look at Dave too. I do own this one. Um, if we go over here to the Webull account, we're up a good chunk of them, but we took a lot of profits on them. We only have 4 shares left. Yeah, if you see these sell orders, I sold 2 shares at 272. What's it today? 221. So I did take a little bit of profit on them because I literally just bought them. But here's what's so incredible about Dave right here. This is a fintech right here. I like Sezzle as well. Sezzle's another fintech. But look at Dave. I mean, the growth is just incredible. It hits a new record of revenue every quarter, and the revenue's up 50% from the previous year. The revenue's up 50%, and they're starting to print a bunch of net income too. So they're net income positive. They're growing. The free cash flow is insane. They're trading at like a 4 to 5% free cash flow yield. So anyway, I do really like Dave, and it might actually be might actually be at a buying opportunity. I don't know, but that's not good. Hey, it says the link won't work. Yeah, hey, it's just called Moomoo. Hopefully that does. Oh well. Anyway, let's go look at some more stocks. Do you think we'll see a pullback in the AI sector? I mean, Nvidia's at an all-time high right now. I think they'll continue to win in the long run, but yeah, a healthy pullback wouldn't be too shocking because yeah, the markets are at all-time highs right now. Nvidia is too. Let's see. Uh, let's go look at some more stocks here. IREN. Oh, someone's actually here's a stock I really like. We'll look at Meta and we'll look at HCA. I love HCA Healthcare. They're amazing. They're a buyback machine. But here's Meta right here. I do own some Meta. This is a great Mag 7 company. They just introduced ads to WhatsApp, which is like a huge earnings tailwind. They just like acquired a bunch of like OpenAI and Apple talent. They have like this super investor team or super intelligence team. Anyway, the PE is pretty fair as well, a 28 PE on Meta. They also just acquired Scale AI, but also the active users here is nuts. Meta has 3.43 billion daily active users. And yeah, now Threads, it's like a competitor to Twitter or X. Threads is now nearing the exact same amount of daily active users as X, which is really cool. But yeah, look at the net income on Meta. It's ridiculous. They're making, over 15 billion of net income every quarter. It's insane, and it's still growing. So the sales are up 16, but the net income's up 34. I mean, that means they're growing their margins. I mean, this is incredible, the margins here. So yeah, they own Instagram, WhatsApp, Facebook, Threads. All right, let's see. What happened to United Health? Yo, they could get accused of fraud. So let's look at HCA right here. HCA Healthcare. So HCA Healthcare, this one is really a buyback machine. This is one of my favorite healthcare plays. I don't know why they're on my other watch list, but yeah, HCA Healthcare right here. You get a small dividend right here. Look at that. You get a close to 1% dividend, a 0.7% dividend, but the payout ratio is only at 12%. So they have a very low payout ratio. Yeah, hey, Life, it's also in the link in the description. I think it should let you view the description. But anyway, if we look at the net income, it's crazy. It's over $1 billion every quarter, 1.5, 1.8 billion. But the best part about this company is actually the buybacks that they do. They have bought back 7% of all the shares just in the past year. So that's crazy. Let's go see how the market's doing really quickly. So we're up 0.19% right now. New intraday high, not too shabby. If we go to year to date, we're up 8.72% year to date. A little better than the S&P 500. Google's having a really good day. Look at that. Google's at a new intraday high right now, up 1.51%. Constellation Energy, this is my main nuclear energy utility play. This company owns 50% of all the U.S. nuclear reactors. We're up 55% on them. They've been a really good winner. But yeah, anyway, let's see here. Can you look at CAH? Yeah, we'll look at CAH. Oh yeah, we'll look at KLAC. So here's Cardinal Health right here. CAH. Wow, look at this stock. It's at an pretty close to all-time high. Do they pay a dividend? They do. So they have a 1.3% dividend. The PE is a 25. So that's pretty fair. So pharmaceuticals and specialty solutions. Sorry about that. Okay. So the revenue is down like 1% year over year, but wow, look at this net income. I mean, the net income's up 93%. Hold on. Wait, so revenue's barely up. Revenue's up 0.02, but the net income's up 93%. So yeah, they're really growing their net margins, which is good. Progressive, yeah, dude. Progressive is one that I love. So wait, if we go back here, someone said Baba. Yeah, let's go to the DeepSeek AI beneficiaries or whatever watch list. So, or let's go to the China Terra tab. My favorite Chinese company is Tencent, and then my second one probably be Alibaba right here. This is like the Chinese Amazon. Oh no, here's what this app is saying. It's saying there's a bearish continuation triangle and the stock's going to go down. Oh, well, that's no big deal. But anyway, the PE, since they're a Chinese company, are really low. They're trading at a 14 PE. So, hey, that's a low PE. And if we go to the net income right here, this is the best part. I mean, this is in US dollars as well. I mean, they're making a lot of net income, a couple billion every quarter. So that's great news. I think they just started paying a dividend too. Yeah, you get a 1% yield here, only a 13% payout ratio. So I do like them. But yeah, hey Granny. Yeah, thanks, Jello. Yeah, I have a tutorial on how to use this app as well. It's also on my YouTube channel. So let's look at. Oh yeah, NU. Do you think NU is undervalued? Yeah, this is the crypto bank out of Brazil. So that's where crypto is huge in South America because the currency suck down there. A lot of them like to use crypto, and NU is a crypto bank. Where's their money come from? Yeah, okay, like I said, yeah, 93% of their revenue comes from Brazil. So that's what you do got to know. But look at the bottom line here. I mean, this is incredible. Yeah, hey, SRP, this is a brokerage right here. If you want to get it, it's in the link tree in my bio. The first link there, it's called Moomoo. It's a brokerage. But yeah, anyway, NU right here, they're making $500 million a quarter, and it's up 50% from the previous year. I mean, it's just seen impressive net income growth over here on NU, and the sales are up 18%. So anyway, I do like NU, and I think they're a little undervalued. Let's see. KLAC. Yeah. Did we not look at this one? My bad. Okay. So wow, look at that. This stock's at an all-time high today. So hey, congrats if you own this one because yeah, they're at an all-time high. They're a huge company. Wow, $122 billion market cap on this stock. So they're a semiconductor play. Okay, printed circuit boards, semiconductor process. That segment of revenue is up 30% from the previous year. So I can see why this stock's at all-time highs. I mean, the growth is really nice. And they made $1 billion of net income in the most recent quarter. Really? Wow, that's incredible margins. That's like a 35% net margin, up 40%. Yo, Clack is crushing it. I can see why they're at all-time highs. They deserve it. SANA. What up, Saint? So SANA. Yeah, $900 million company, very small market cap, stocks at an all-time, or not all-time low, but I'd be really careful with this one. It's not really a stock I'd cover. And they're a revenue-less company. So look at that. The revenue is zero because they don't sell anything. So they've never sold a product or a service. So yeah, we go to revenue. It says no data. So this is a startup right here. So they have no revenue. And if we go to the net income right here, this is not good. They're losing $50 million a quarter, which is, 20% of their market cap a year. And look at this. Because they lose net income, that has to come from somewhere. So look at how their assets just decline every quarter. SANA is one I'd stay away from. Maybe it could be a fun little swing trade or something, but yikes. Let's see. NVHE, and check the dividend. NVHE. Okay, let's check it out. Okay, so this is a Canadian like ETF or something, or a fund. So it looks like a covered call ETF on NVIDIA or something. So what's the yield here? We'll check it. It must be really high because of the cover. Yeah, so 15% dividend yield on this company. Anyway, NVIDIA's at all-time highs now. Like the asset NVIDIA is at all-time highs, and this isn't at all-time highs because they sell calls on NVIDIA, I believe. So you won't outperform NVIDIA, but you do get that nice income. Let's see. NBIS. Yo, what up? Yeah, we'll check out NBIS. That's a stock that NVIDIA owns. So we go to NVIDIA. Where are they? Okay. NVIDIA right here. Obviously, their main holding is CoreWeave. Oh, yeah. Someone's been saying APLD. Remind me to look at APLD. What's it? Hey, user 23. This is a brokerage. If you want to get this brokerage that I'm on, link tree in bio. It's that very first link there. Affiliate link too, so I'd appreciate that. But it's free. But anyway, here's Nebius AI right here. I love this app for all the analysis you can do. Like you can see where the revenue comes from, where the revenue comes from in terms of geographical. But anyway, this is the best part about Nebius AI right here. Besides the fact that NVIDIA does own some of them, the revenue growth has been incredible. Look, the revenue last year was 11 million. Now in the most recent quarter, it's 55 million. So that's something I'd pay attention to. Incredible growth. This growth rate, what's it going to be this time next year? Still got to be careful. They are losing some money, like 100 million a quarter. But what's the balance sheet like? Yeah, fortified. Wow. Incredible balance sheet. So yeah, anyway, I like that one. Oh yeah, we'll look at APLD. Since we're here in the NVIDIA watch list, we'll look at APLD as well. So this is cloud play, or the cloud growth has been huge here. And also APLD just had a huge partnership with CoreWeave. So that was why this stock initially rallied so much, these candles. But now it's kind of like flagging down. Here's why I like this one, and I'd probably put this one on your watch list. So the cloud service business right here has seen incredible growth, and no one else really shows this stuff. So I just like showing you the numbers for yourself. You can draw your own conclusion. Oh, we'll look at Pepsi too. What up, Francisco? So the cloud service revenue is up 220% from the previous year. So APLD's cloud service business has seen some very nice growth to it. They are still losing money every quarter, so you do got to be careful. They're not profitable yet, but they'll hopefully like outgrow that. So yeah, let's see here. Thoughts on Meta? Yo, we just looked at Meta. Give me a little bit and we'll look at them again. Oh, yo, Caden said, actually, I want to look at Pepsi. Remind me to look at Salesforce. I want to look at Salesforce too. We'll look at Rivian, Symbiotic. Yo, that's a big robotics play. So here's Pepsi right here. Yeah, the stock market is at an all-time high right now, but look at Pepsi right here. They are not at all-time highs. And I love this company in terms of their brands. I mean, Doritos, Cheetos, all the Frito-Lay brands, all the sodas. They own Gatorade, Pepsi, obviously. But I like this company for the yield you get. Now, look at this. You get a 4% dividend, and the payout ratio is a 76%. That is a bit high of a payout ratio, but I trust Pepsi to keep their dividend safe. We'll probably just see a little bit of slower dividend growth in the future, which is all right because the yield's already pretty good at 4%. They don't need to really raise it too much, because I think investors are happy with the current yield. And look at the bottom line here, the net income they're making. I mean, they're making if you average it out, over $2 billion of net income a quarter easily. So yeah, I do like, and I trust Pepsi. All right, so UMAC, what is this company? UMAC. So we'll check it out. What's up? So this is a very, very small company, a $307 million company. But check this out. They're up 42% on the day. I do wonder what the good news is. A Pentagon lifts drone restrictions, sending shares of defense stocks higher. So, hey, this might be a drone play or something. I don't know. Maybe I could check the profile real quick and read what they do. Focus on first-person view technology. I mean, it doesn't matter too much what they do. It's still a really small company. And do they have revenues? Let's see. Revenue $2 million in the most recent quarter, and their loss $3 million. They have a pretty decent balance sheet, but I don't know if I'd buy this one after the rally. Still a small company. I'd just be careful with that one. Oh yeah, Symbiotic right here. This is your warehouse robotics stock right here. So this is a huge robotics play. This one's been crushing it. Look at that. They've had a great rally the past couple weeks here. So let's see. 93% of the revenue system. So this company has just seen really nice revenue growth. This is like your real robotics play. I would stay away from Rich Tech Robotics and all those other really small names that don't have any IP or revenue. This one has real revenue, real IPs, real patents, and the revenue is up 39%. Really good growth there on the revenue. So the revenue's up 39. They are still losing net income, but the trend is getting way, way, way better. I mean, they even made net income 2 quarters ago, and the net income loss was 60% better. So anyway, I do like Symbiotic. It's just like a hold play. So let's see. Oh yeah, Salesforce. I wanted to get to this one. So this is like your CRM play. Oh yeah, we'll look at INTU. That's oh, look at this. There's a little analysis or technical analysis right here. What is this? So a double bottom and the rise probability this app is telling me is a 95% chance. So hey, let's hope that's right. But yeah, dang, look at them the past couple of days. They've not had too many good candlesticks. But I love this company because of the growth, the free cash flow here. So look at this, how diversified that they are. They're in services, and then they're in sales, platform. They own Slack. The huge acquisition, if anyone's heard of Slack before, Amazon owns them. Integration, analytics, marketing, and commerce. And if we look at these individually, like the growth is there. I mean, look at this service annual revenue hits a new record. Then we go to the sales annual revenue, at a new record. Platform another, at a record. Integration, you kind of get the point there. The business is growing. Also, the FCF, which is free cash flow, incredible the most recent quarter, 6.3 billion. I mean, that's some crazy free cash flows, and they're making net income 1.5 billion. The net income did barely grow. It was only up 0.5%. I would have liked to see that be a little more, but and the free cash flow, if we look at the FCF, the free cash flow was only up 3%. So I think investors would have liked to see a little bit higher growth in single digits, but I still like that one. I think the valuation's pretty fair there. Yo, what up, Luke Cannon? How's it going, brother? Oh yeah, INTU. So this is Intuit. This is the company that owns TurboTax. And wow, look at that. They're at an all-time high right now. They've had a nice rally. What? This wasn't on earnings. There was, or maybe it was. Okay. Anyway, the stock's at an all-time high right now. Let's go look at the fundamentals because they usually make all their net income in one quarter. Tax season. Yeah, look at that. The most recent quarter, they made 2.82 billion of net income, up 18% from the previous year. So anyway, yeah, they have almost like a monopoly on like helping you do your taxes or whatever. Let's see. Bought a call for 36 for GG for Google leveraged up like $10. Hey, nice, Luke. Can you break down GameStop? So GameStop, this one, the business isn't growing, but they did something genius, which I actually like. Even though they're a meme stock, this one has a little bit of merit to it. So if you look at the top right, the market cap, GameStop is worth $10 billion right now. So they're worth $10 billion. And let's see how much cash they have. So first off, GameStop has no debt at all. So GameStop has no debt. They're worth $10 billion, and they have $6.4 billion of cash. And that cash is earning a bunch of interest. So literally roughly 60% of the market cap is just their cash on hand. And that's how they're making net income. Because if you go to the revenue right here, this is not what you want to see. I mean, fundamentals are just declining. Sales are down 17, but they made net income. The only reason they made net income is because they have $6.5 billion of cash, literally milking interest rates in these 1 to 3 week treasuries. So yeah, Rocket Lab. Hey, yeah. Oh, and what is ARLP? We could check that one out too. RKLB, so this is probably my favorite space stock. It's tough buying this one at all-time highs. They've been doing really good, but they have a huge backlog of orders. Like they literally have like a $1.5 billion backlog of orders, which is good. And they also just acquired another company. Forget the name of it, but they just acquired a company for like $800 million. If we look at the space system sales here, the sales are doing great. It's up 45% from the previous year. So incredible space systems revenue growth on Rocket Lab. And with that new acquisition, the growth is just going to be even better. So that on top of the huge $1.5 billion backlog, I think that it kind of explains why that stock's at all-time highs. And just the whole market is too. Hey, what up, big mans? UMAC doing good? Yeah, we had just looked at them. Let's go look at HIMS right here. HIMS. So yeah, this is a high momentum play. Let's see. HIMS. I do like the fundamentals here, but the reason they gap down right here is because they can no longer sell a weight loss prescription. And that was like a huge thing they like to sell. It brought in a lot of revenue. They sold this weight loss prescription, but now NVO, which owns Ozempic ended their partnership with HIMS, and that's why on this day right here, the stock kind of fell so much. So there's going to be kind of an earnings headwind, but for right now, the earnings are incredible. Look at this. The revenue is up 110% from the previous year. The business has more than doubled in a year. So incredible growth there. And also the profits here. The free cash flow is up 320%. They're making over 200 million free cash flow a year. Net income's just as impressive, up 340%. So, and they have no debt either. So I like HIM's fundamentals. But I think the reason they're not at all-time highs and they're kind of struggling is because the future is a slight bit uncertain. So let's see. Rivian. Yeah, so Rivian, the largest shareholder of Rivian. And yo, Luffy, what's up, brother? With Rivian, this one still just burns a bunch of money and they're kind of stuck because they're just losing a boatload of money. And it makes this a tough buy. Like, I really wouldn't want to be a Rivian shareholder. And I technically do own some Rivian because I own Amazon. So look at this. Amazon is the largest shareholder. They own 13% of Rivian. And if you notice, check out the second largest shareholder. It's Porsche. So they own another 12%. But anyway, Amazon, I do have some exposure to this through Amazon. But bad news is they're losing a lot of money. And the trend is getting better. That is good news. But they still lost 550 million in the most recent quarter, which is over 2 billion annualized, and the whole company is worth 15. So these losses aren't sustainable. I mean, they're having to dilute the shareholder, raise equity. I mean, it's tough for them. So I'd be careful with that one. But hey, I do got some Amazon shares, and Amazon's been doing great. Look at this candle on Amazon. I mean, they're at like a new 52-week high. I don't think it's a 52-week high, but definitely a really nice V-shaped recovery over there on Amazon. So innovative. Yeah, Lucid probably going bankrupt. Rip. What app are you using? Hey, yeah, Ali. If you want to get this app, it's a brokerage. It's in the link tree in my bio, the very first link there. Yeah, I love doing all the analysis and stuff on here. So APLD, yo, we just looked at APLD. Give me a minute and we'll come back to APLD. And by the way, if you missed anything, I'm streaming on YouTube as well. You can watch us on the YouTube replay. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio there. It mean the world to me. Like, if someone said, would you rather me donate you $1 or just subscribe to my YouTube channel? I'd honestly rather subscribe to my YouTube channel. I'm trying to build it. I don't get many views. I only get like a couple hundred views a video. So I'd appreciate that. Anyway, here's AppLovin right here. This company has incredible growth behind them. And I think they're probably at a decent valuation. So look at this. 79% of the money comes from their advertising business. And look at this right here. This is why people love AppLovin. This growth is just incredible. It's up 71% from the previous year. I mean, look at that, to a new record. It was 1 billion, and it's not just the top line growth, but bottom line growth. Look at the FCF, the free cash flow. It was up 111% from the previous year to 800 million. We go to the net income, it was up 144% year over year. I mean, this growth of the profitability on AppLovin is incredible, and that's why they were like one of the best performing stocks for these couple years. So anyway, I do like that one. I put them on your watch list because that one I want to have some exposure to. But there is a little lawsuit. I think Meta is suing them, I think, right now. There's like a lawsuit from Meta. They're like stealing their ads or something like that. I don't know. But anyway, yeah, what up, Jella? Said Clover Health. I think this is, let's see, a $1.5 billion company. Let's go analyze them. So insurance. So they're an insurance business. And hey, look at that. Their insurance premiums are up 33% from the previous year. So that's actually very good growth. So they just jumped up, 43% from the previous quarter. Great news. Are they profitable? So they're just now getting net income positive. The trend is getting way better. All those year over year green comps look amazing. So yeah, by this time next year, this company should be profitable. I mean, sales are up 33. They're deleveraging. Yeah, their asset to liability ratio went from 56 to 42. That's all great. So, hey, the financials look pretty good here. No dividend on this one. They're a small company, like $1.5 billion company, but the sales in the most recent quarter were 450 million. They have a lot of sales for the low valuation. So, hey, they might just be getting tied in with all the like Oscar Health, Medicare, Medicaid shenanigans. They might be a Medicare, Medicaid provider. Let's see. SoFi Prim. What is PRIM? We'll check this one out. Hey, look at that. This one's at an all-time high right here. So congrats if you own this one. Let's see if you can find out why. They're still a small company trading at a fair valuation, a 23 PE. Yeah, look at that. A 22 PE ratio. Energy utility play. So that's why the fair valuation. So very low dividend, but also very low payout ratio. So they have room to raise the dividend. Sales were up 16. Wow, this is really good bottom line. I mean, it's up over double. I mean, they're making 50, 80 million a quarter. I can definitely see why this stock's at all-time highs. I do like Prim. Should I invest in a safety stock or something like SoFi right now? So yeah, SoFi is one I really love, but it's tough buying them right here. Really over $20. It's a tough buy, but they deserve it. I mean, they're an incredible growthy company. The fintech space has been doing amazing right now, and their financial services, the business has more than doubled in the past year. So SoFi, they deserve to be at a 52-week high. Yo, Yash Patel, no way, brother. Thanks so much for the 3 roses there. I really appreciate that. Yeah, we got some winners and some losers in here. Like we're down bad on UiPath, Zoom. But hey, all time in this account, we're up 11%. Not I'm definitely not an expert. Have not outperformed the market in here, but we're up 11% all time in this account. I just like being fully transparent. I'll show you my winners, my losers. I don't sell anything. I don't have a course, a book. I don't got nothing. Literally just on here giving my opinion. So if you want to help me out, hey, hit the follow button. So let's keep doing some stock analysis here. So Danny said OKLO. That's a nuclear play right here. So I do love the nuclear energy industry. And yeah, if we go to the nuclear watches, OKLO is like one of the main nuclear momentum names. So the thing with Oklo is I think they're a startup. So if we go to the revenue right here, so yeah, this is a revenue-less company. So they are a startup. They want to make these mini nuclear reactors. And like, if you like imagine like in your head, like a normal nuclear site, like there's those huge silos, like huge like anyway, this is still a startup. They're not making any money. It's backed by some smart people. They're losing 10 million a quarter. So I just go with a different nuclear name. They have a great balance sheet, man, since the IPO. But yeah, I'd probably pick like a VST, a CEG. That's what I own. I own a CEG. That's the largest. Here, I'll show you that real quick. If we go over here, this is my main taxable account, by the way. Hey, look at that, up 0.22% on the day, not too shabby. But the main nuclear energy play is CEG, Constellation Energy. This company literally owns 50% of all the U.S. nuclear energy reactors. So, hey, there's like a new feature here where you can like, anyway. No, we're not going to look at DJT, man. There's no fundamentals there. They just have a bunch of cash on hand. Someone said Calm. Yo, I love this stock right here. I do own them. We are down on them. So I have 7 shares of ticker symbol CALM. Yo, Bob, what's up, brother? With these brokerage, are using them to make your, yeah, I did. Hey, what up, Francisco? Yeah, dude, every time I have extra money, like I try to invest a couple hundred every month, and I've been investing a couple hundred every month since the day I turned 18. And I remember I was waiting so bad that you can't have an account until you turn 18. I was waiting for the day I turned 18. I had a couple thousand saved up. So anyway, here's Calmain right here. This is the largest chicken egg producer in the US. So this has like a 25% market share for chicken eggs. And not to get into a little conspiracy here, but there's been a lot of chicken farms being burned down. There's bird flu or whatever, and that just absolutely helps Calmain. I can't believe it in the most recent quarter. I mean, y'all probably have seen the egg prices. I mean, they made literally $508 million of net income just in the most recent quarter. Ridiculous. And also, because of that, they have this crazy dividend now. Literally just in the most recent quarter, they paid you $3. Look at this dividend right here. They pay you $3.50 in tax-free qualified dividends. The whole company is $99 a share. So I literally, and if you own the share too, you get a 3.5% instant dividend return that's tax-free. So anyway, I really like Calmain. I own them for the dividends and just, it's a commodity. They just sell chicken eggs. But why not have some exposure? Let's see here. Yo, what up, Bobby said SRFM. What's the Surf Air Mobility? I haven't heard too much about this stock. I mean, we can read the comments here. I don't know if there's any like specific news here. Let me go to the news tab. Surf Air Mobility. Yeah, they're up 23% on the day. So first off, this might just be momentum. Congrats if you own them because they're up 23% on the day. But this isn't really a kind of stock I want to cover on this channel. They're only a $300 million company. The sales are down 23% year over year. They lost. Ooh, look at that balance sheet. They have twice as much liabilities as assets. Nothing's really just blowing me away here. I mean, literally, wow, 240 million of liabilities, and the whole company's worth 316 million. So, dang it, TikTok. Inactivity detected. Okay, hopefully we're back. TikTok said I was AFK and I had to fill out a CAPTCHA, so we're back. That's weird. Anyway, I don't know. Let's go look at some other stocks. Palantir. Palantir bought SRFM. That could be why. Actually, let me go back there. SRFM. And then we'll look at Palantir, actually, because so if we go to shareholders right here, yeah, look at that. That must be why people like this stock. It's now making sense. Look, 13% of this company is owned by Palantir. So if you own any Palantir, you technically own a little bit of that stock right there. Yeah, some of these publicly traded companies buy other companies, like NVIDIA owns a bunch of CoreWeave and ARM and APLD, and Amazon owns some stocks as well. Anyway, here's Palantir right here. Palantir, phenomenal company, but the valuation's a little high. I'd love to own this one, but not at this valuation. 623 PE, not exactly cheap. But here's why they kind of deserve their premium valuation. The government loves them. Literally 55% of the revenue comes from the government. So many police stations use Palantir. And look at the growth here. It's up 45% from the previous year. I mean, this is incredible growth. And also the commercial revenue, which is like from S&P 500 companies, the revenue's up 33% year over year. So I try and just provide value on here. I don't just like look at the stock and do technical analysis. I try to show you the numbers for yourself so you can kind of draw your own conclusion. They also have a fortress of a balance sheet, no debt, lots of cash, and that cash is also earning interest. So, and this is everything investors want. It's AI, it's government, it's contract. Great company right there. They're like the real AI data play where companies can actually use their AI or their data. Let's see. Let's look at some other stocks here. Realty Income, that's a REIT right there. So ticker symbol O. Yeah, this is a REIT right here. You basically buy this one for the dividend. So they do triple net leases. So 5.5% dividend. Literally by law, they have to pay out most of their taxable income in the form of a dividend. So this really high dividend yield is actually sustainable because they're a REIT. A REIT is just a real estate investment trust where 90% of their assets are real estate and they just do triple net leases. And they also pay, what's really cool is a monthly dividend. You get paid every month with this, 26 cents a month with Realty Income. So yeah, I actually own a competitor to Realty Income. If I go over here to my Roth IRA, again, it's only $1,400. It's not a huge Roth IRA, but I own one of their competitors. I own BRX. They do exactly what Realty Income does. They do triple net leases, but they are in. Oh, look, I got a little small dividend. But they're grocery store heavy. So this company's main tenants, main customers are Publix, Kroger, TJX, Ross. So anyway, I got a small position in them. Oh, here we go. Let's see. GTLB, is that GitLab? So yeah, this company has actually seen some decent growth, but unfortunately, I think AI thesis is hurting this one. So yeah, if we look at that, the stock really hasn't done anything for a couple years, which is unfortunate. But let's go look and see how the growth is. So click on revenue right here. Let's go to the annual revenue. It's up 31% from the previous year. So actually, let me go here. Revenue up 26% year over year. What's this website? Yeah, hey, this is a brokerage right here, FINRA. So if you want to get this brokerage I'm on, it's in the link tree in my bio. It's the first link there. So anyway, they're losing. Actually, no, they made net income. The trend is getting a lot better, actually. So revenue's up 26. Probably by this time next year, they'll be making net income every quarter. I mean, hey, nothing's really too wrong here. I don't really know why the stock has been hurt so much because the sales are still growing. They'll probably this time next year, they'll be net income positive. So, great company overvalued. Yeah, Palantir. KTOS. So Aiden O'Leary, Kevin O'Leary's son said Kratos Defense. So yeah, this is your drone play right here. They're up 11% on the day. Look at that. That's like is that an all-time high? So geez, all-time high on this company. Still a small one. Oh, wait, no, they're not small. $8.5 billion market cap. So yeah, unmanned systems. I think that's what the drone segment is. But the Kratos Government Solutions, the government is, a huge customer in them, 80%. And look at this net income right here. They're actually net income positive and they're profitable. They're making, a couple million not huge, but still they're not losing money. They're making net income every quarter. So I like that with Kratos. Let's see here. INVZ. So Innoviz Technologies. So yeah, we don't really cover these. $300 million company. Stock has done decent the past couple of weeks here. I mean, I'll be really quick with this one. I mean, revenue 17 million. Hey, the revenue did just jump up 146%. They're losing 10 to 20 million a quarter. Trend is getting better though. Yeah, it is. So, but still, they're losing 10, 20 million a quarter, and the whole company's worth 300 mil. It's tough to buy that one. It's just really small company, but the trend is getting better. If they can keep up that trend, that'd be good. Is this No, this is not Webull. But I do have a Webull account too. What's the best platform to trade on? I think this one right here. This is my favorite platform right here for analysis and analyzing a company. And it's free. You don't have to pay any monthly thing. I keep my cash in here. It earns me the nice yield. If you want to get this app, it's actually a brokerage that I'm on. You want to get this platform I'm on, it's in the link tree in my bio, very first link there. It's an affiliate link. I'd appreciate that too, but it's free. And there's like you can view all these really cool watch lists right here, like these super investors like Warren Buffett, Nancy Pelosi. Since their net worth is over 100 million, they have to reveal all their trades to the public by SEC law, and we can see all her holdings. Like her largest holding is Apple, and then Amazon, Google, Salesforce. She owns some nice cybersecurity names like a CrowdStrike, a PanW. She got Disney too. Nvidia owns. Warren Buffett's been buying the dip too. He just bought some Kroger and Amazon. That's what I didn't believe. If we go to Warren Buffett's portfolio right here, I don't know where Amazon is, but he just bought Kroger. He bought Visa. He bought some SiriusXM and Mastercard. Anywho, let's keep going here. Nikki said VERI stock. Is that VeriSign? So I think that's the company, or no, never mind. This is Veritone. You're very small company. I wouldn't really touch this one. Yo, what up, Willanda? Willanja? I really appreciate you being here. What's up? So yeah, $78 million company. This is a stock that I would not touch. The whole company's worth $78 million. And let's see, revenue's down 7% year over year. And they're losing 20 million of net income a quarter. If you look at the net income, it says they made 31 million last quarter. That's an accounting trick, unless they sold some of the business. Let's see. They did sell some of the business, but anyway, they lose 20 million a quarter, and the whole company is worth 70 million. So they're going to be bankrupt in 2 months. Making any international play. So I only own one international stock, and that would be ticker symbol FUTU. This is a fintech. So if we look at the stock, though, they've been crushing it, and they've been making so much money that they started paying these. They're now doing like a special dividend since they're making so much money over here. This is a Chinese stock, but actually, look at this right here. If we go to the net income, I mean, it's at a record. I mean, up 109% from the previous year. The margins are the best part. They have 45, pretty much 50% net margins. I mean, it's crazy. So. Wait, I forgot to look at this one. ANET, is that Arista Networks? So yeah, I have this one on my watch list. I do really like Arista Networks, a really nice growth company. Let's see. So no dividend on this company. That's all right. So they sell products is 85% in services. Let's see the free cash flow here. Yeah, the free cash flow is crazy. Pretty much $1 billion of free cash flow a quarter, and it's growing. And the revenue's up 30% year over year. The net income is as well. So look at that net income. This is after tax money. I mean, 800 million just in the most recent quarter, up 27%. So that's what I like to see. The balance sheet keeps on getting better too. The assets keep on growing. So I really like Arista Networks, and they're on my watch list too. So let's see. How long have you been investing? Since the day I turned 18, actually. So, Kevin said Walmart. So Walmart, this is, your main grocery store play. I mean, they're getting into e-commerce as well. Like Walmart's kind of coming for, not really, but they're coming for Amazon. They do like delivery as well, but like they own Sam's Club as well. It's like a Costco competitor. You buy stuff in bulk. Feels like you get a good deal. But yeah, if we go to Walmart's net income right here, I mean, this is what's crazy. I mean, Walmart's literally making $5 billion of net income every quarter. I mean, it's ridiculous. And even if you buy the one, you get a near 1% dividend. So Walmart, that they do good in a recession too. People still got to get their groceries in a recession. So SoundHound AI. So yeah, SoundHound AI right here. You're mainly watching the subscription revenue on this company. Now they have been through some stuff like Nvidia used to own them. Then Nvidia completely sold out of them. I think that's why they declined on this day right here. Nvidia sold out of all their SoundHound AI stock. But here's what I like about them, and I'd still be careful. I'd keep it as a small position. You can't really trust a lot of money in this one. But look, 85% of the revenue comes from their subscription service, their subscription revenue. And look at the growth there. I mean, it's unbelievable. This time last year, it was 650,000 of revenue. Now it's 25 million, up 600%. And at this crazy growth rate, what's it going to be this time next year? So I really like the growth there on their subscription revenue. Still got to be careful though. They are losing a lot of money. I mean, 50 million the most recent quarter. Yeah, the royalties have also fallen a bunch. So it's a mixed bag there. Let's see. Palantir. Try not to spam. Yeah, we can check out Palantir real quick. I'll be quick about this one because we kind of just looked at them. But Palantir, only thing that sucks about this one is that they're at an all-time high. Yeah, someone said Surf Air Mobility. Palantir just bought a bunch of Surf Air Mobility stock. Anyway, if we go to Palantir right here, half the revenue comes from the government, and so many police stations are using their data, and the revenue growth is just crazy here, up 45% from the previous year. So Palantir is just a great growth company. They're making net income every quarter, and they have a monster balance sheet. I mean, no debt on this company. They have lots of cash. The cash just earns interest. Yeah, hey, we'll look at BKSY. BKSY. So I think this is Black Sky Technologies. Yeah, so this is like a imagery satellite company. I haven't done too much research on them, but look, they've done pretty good. I mean, if you congrats if you own them before this little run up right here. What about the weekly chart? Um, you know what? Yeah, so definitely down from their IPO in like 2021. This used to be an $80 stock. Jeez, but let's go look at the financials here because that's what matters. So imagery and software analytics, professional and engineering. So let's see. They're losing money every quarter, but what's the revenue? So the revenue is 30 million, up 21% year over year. I mean, not too bad growth, up 21%. But they're still losing 12, basically 10, 12 million in net income a quarter. I would be careful of these net income losses, but cash from operations just exploded up high. That's good. I got to do more research on them. I know they're just a really small company. It's not an industry that's yeah, I really want exposure to. Yeah, Palantir has a nutty valuation. So Netflix, okay. Um, YOLO said we'll never buy Palantir again. Nope. What's up, YOLO? So yeah, here's Netflix right here. Yo, Netflix has been crushing it. Hey, I mean they're kind of off their all-time highs. Maybe it's a good time to well, probably not yet, but here's what's so great about Netflix. I mean, if we look at their premium subscribers, a year ago it was 260 million. Well, now for the most recent quarter, it was 301 million. I mean, that's a nice little growth rate there. So their subscribers are going up. Yeah, we watched the Super Bowl on Netflix. So also, if we go to the net income right here, look at this bottom line. I mean, they're making 2 to 3 billion in net income every quarter. So great net income, great free cash flows on Netflix. They'll probably one day pay a dividend. So they're cool. You like Sierra? Yeah, we went over Caden Salesforce. If you go on the YouTube, hey, if y'all want to support me, main way to support me, go subscribe to my YouTube channel, or better yet, watch the stream from YouTube. My TikTok account was literally banned for 2 weeks and it just got unbanned, and I'm surprised it's unbanned. So I'm scared it's gonna get taken down again. So if y'all want to support me, YouTube channel is called Nathan Robert. Link tree in my bio. I don't sell anything. I don't got a course, a book, or anything. I'm just on here giving my opinion. And yeah, if you miss anything, you can watch on the YouTube replay. So here's Pool Corp. Yo, spread the wealth. What's up, dude? We'll look at that stock too. So here's Pool Corp right here. This one, Warren Buffett did buy a little bit of this company. It wasn't Warren Buffett, it was Berkshire Hathaway, his like fund or whatever. But anyway, they have a 1.5% dividend, which is pretty cool. They have a monopoly on like the pool part industry. So all the pool suppliers like get their stuff from this company right here. But there's bad news, their margins have kind of collapsed. So if we go to the revenue's down 4.4%, but the net income is down 33%. So I think that is why the stock has not been performing too well, because the margins have kind of collapsed here. So, but they're still making net income every quarter, but the net income fell 33%. We want to see margins come back and kind of growth come back to that company. So let's see, CNXC. So let's see, this is Concentrix. So, wow, look at that. They had like some nice news on this day. What's the market cap? So, $3.7 billion market cap. Not bad. What's the yield? You get a 2.2% dividend yield on this company. That's pretty good. What do they do actually? What industry are they in? They are in information technology. What about profits? So, yeah, hey, look at that. They are making net income every quarter. So, that's good news. I mean, revenue's up 1. Net income did fall 37, so that might be a little bit of a reason why the stock's falling. The margins the margins fell actually, but still they're making net income every quarter. Oh, wait. So they're having a lot of one-time adjustments. That's really weird because they're making like 140, 150 million of operating profit a quarter and only 40 million in net income. So they're having some weird like one-time adjustments. I wonder what the share structure is like. Anyway, I got to do more research on that one, but they're cool. They have a nice yield. Only flat, so avoiding all stocks. Yo, what up, real investor? Good to see you, dude. All big players are busy taking Bitcoin, gold, and silver to all-time highs. Yeah, man. Bitcoin's like uniquely positioned. Yo, Soy, no way, dude. Soy, thanks so much for the rose, the gift there, dude. Like Bitcoin benefits whenever the dollar goes down, war fears, inflation fears. Bitcoin goes up on that. Where's the vid? Hey, yeah, Sean, if you want to, I have videos on my YouTube channel. I don't sell anything. He says, where's the vid teaching this? I don't have a course, a book. I don't have none of that, but I have free YouTube videos. Like I show you one video, I just made it like 2 weeks ago, how I fully analyze a stock. I'll show you the exact financials you want to look at. I have tutorials on how to use this app as well. I have multiple accounts, by the way, but I just love this app right here specifically for fundamentally analyzing a company. You can't really do that on Robinhood. Robinhood may be simple, but you're not really going to analyze a stock on there. So, all right, best penny stocks. Yo, I don't really like penny stocks. If I'm going to trade something, I'll trade something with good fundamentals. But there are some penny stocks with good fundamentals. Like I have some smaller market caps, like a Dave. What's the market cap on this one now? 2.9 bill. Okay, I thought it was lower. They've just increased so much. $2.9 billion company. PSIX. Hey, this is one of my most recent purchases, actually. I made a YouTube video about it. PSIX, they're a $1.6 billion company. So very small market cap, 1.6 billion, but I believe this is the kind of company that might just continue to keep on hitting new all-time highs. And I kind of go over this in the video, but the fundamentals have dramatically increased. They're now making a bunch of net income every quarter. The margins are growing. So PSIX is a cool one. A $1.6 billion company. And then the smallest company that I own, the stock I'm down a boatload of money on, is this stock right here. And they're only a $500 million company. So, but they're losing it. They just lost a contract with Microsoft. And yeah. So here's a stock. Yo, what up, Sean? So yeah, this is a company I'd stay away from, actually. So here's Boeing right here. Obviously, we know there's been like a bunch of countries that have ordered a bunch of Boeing planes, which is great news, like to try and help out. I don't know. They're just ordering a bunch of Boeing planes recently. So that kind of is why the stock's done so good recently. So the future earnings are hopefully going to improve. Obviously, the stock is way down since 2019. But here's the bad news and why I'm just going to stay away from this one, Yo, Soy, we'll look at ISSC after this. I got you, brother. Thanks again for the gift there. So if we go, yeah, look at this. So commercial planes are half the business and they're in defense space. But if we go to the net income right here, Boeing literally has not made a single dollar of net income in over 2 years. It's been over 2 years and they literally have not made a single dollar of net income. I mean, matter of fact, in that 2 year span, they lost over 10 billion, well over 10 billion of net income. So anyway, and they have more liabilities than assets. So I'd be careful with that one. Oh yeah, InnoData 2, that's another good one. Um, let's see. What stocks should we look at here? MA is fire. Is that MasterCard? Yeah, hey, MasterCard, Visa, your two payment processors, credit card providers, these are huge. I mean, those small little micro transaction fees that are slowly bankrupting us are making MasterCard a lot of dollar hollers. And yeah, this is one you probably just want to buy and hold for the long run, So if we go to MasterCard right here and go to their net income, I mean, this is crazy, the net income that they're making. Oh, this thing just disconnected. Okay, we're back. The net income, look at this. They're making 3.3 billion of net income every quarter. And it just slowly grows as well. It's up 9% from the previous year. So net income's up 9%. To 3.3 billion, and you get a small dividend, but it's nice, 0.5% yield, 20% payout ratio. So MasterCard's a nice one. They're just printed money. So I said ISSC stock. So he said it's a small cap. So innovative solutions and support. So yeah, really small company, a $220 million company. Let's see. So product and services. Where are the market? So half the revenue comes from the U.S. And look at that. They are making net income, and that's real. They made $5 million in the most recent quarter. They have a really good balance sheet. Let's see. So 5.4 mil of net income. And the whole company's worth 220 mil. So yeah, the PE ratio is a 21. That's actually that's pretty good, actually. So that one might even have more room to grow. What were the sales growth again? Sales, oh, dude, wow, sales doubled. Sales are up 104% year over year. I'm actually going to add them to the watch list. Hey, Soy, I like that one. Got to do a little more research, but that one looks cool. Oh, yeah, hey, FICO stock. So, yeah, FICO, this one is getting a bit of government intervention right now. Basically, if we look at this, we're wondering what kind of happened to these candles in the most recent days here. Basically, the government wants there to be more competition for the scoring industry. And I think there was some article on it that we were reading. you know, I'm not going to look for it, but anyway, basically FICO, the scores business is going to get hurt in the future. And if we look at where the revenue comes from, 60% of their revenue comes from their FICO score. Like whenever you go make a big ticket purchase, you go buy a car, a house, you're paying like $6 for like a FICO score. So recently they've had a tremendous pricing power. They're like, hey, we'll charge $8 and people will still pay it. So what's on your watch list? Hey, what up, Samir? Good to see you, dude. I don't have too much on my watch list right now. Here's everything new I've kind of added. ISSC, HCA Healthcare bought back 7% of the company. Hey, Meta took a 3.5% stake in this company. So if you own some Meta, like me, you technically own a little bit of this company right here, ESLOY. This is a France company, but they own Ray-Bans. They're a huge company, $130 billion company, but they own Ray-Bans and a lot of luxury stuff like that. Uh-oh. Well, this is not... Oh, hopefully we're back. Hey, sorry, a little bit of Wi-Fi problems, but hopefully we're back. Hey, if y'all want to hit the follow button, we go live every day, twice a day. FICO, is it good or bad? I think it's probably a pretty decent buy right here. Here's kind of like how I like to buy those kind of positions. Like you start with a very small position. Like right now for this stock, I bought 5 shares of ticker symbol PSIX, and I'm literally only going to buy more of this stock. Like I started out as a very small position and I'm only going to buy more once/if I'm down 10%. And if I'm never down 10%, well, then all good. I'll just let it be a winner. But so that's how I kind of, it's good. Anyway, let's see here. UNH, yeah. So United Health, this one, we use United Health, there's a dilemma here, though. So if this company gets accused of fraud, they will get kicked out of Medicare and Medicaid for 5 years. And that's why the stock literally collapsed right here. It started to price some of that in, like real chances of that happening. That's why the PE is so low. The PE is a 12 because of so much future uncertainty. But if they don't get accused of fraud, and this is all just like a one-time thing, I mean, this is an incredible buy the dip opportunity. I mean, you get a 2.8% dividend yield here. We actually use their OptumRx. We're a customer. So look, if you go to the OptumRx business, this is why the government's probably not too happy with them. I mean, how does your revenue, in 2019 go from 33 billion, 35 billion to, 133 billion? And that's just one segment of business. Also, look at the United Healthcare business. That for the full year 2024 was 300 billion of revenue. I mean, it is crazy. So they have massive revenues, and they're an insurance company. They usually make like 6-7 billion a quarter. So, oh yeah, hey, SCHD stock. Yeah, this is actually or SCHD ETF right here. So if you're looking for like a higher yielding ETF, this one might be the one for you because it owns a lot of the higher yielding assets. You won't outperform the S&P 500 in the long run, but you do get a 4% dividend. Yeah, if we go to dividend, 3.75% dividend. And if you're like, why did it go down? They did like a stock split. So it didn't actually go down. But anyway, look at this right here. They own Texas Instruments, Chevron, the healthcare names. They own Pepsi, Home Depot, Merck. So a lot of the higher yielding names. All right, so what stocks are you holding long term? So yeah, if you look at the top left of this portfolio, it's called buy and hold portfolio. This is my portfolio where once I buy a stock in here, I try not to ever sell it. I just want to hold it for the long run. And these are all the stocks that I own in here. But I have multiple portfolios. Here's another, I haven't made any changes in this account in a long, long time. But here's another buy and hold portfolio. If we go to the total percent change, we are up on every stock in here. The market's been doing great. I mean, year to date, we're up 8.7%. Literally, this was crazy. The April dip. If you just didn't sell in April, you're doing great. I mean, we were down 15% at one point, and now we're up 8%. I mean, the market's been having a nice recovery. Yeah, past month we're up 7.5%. Crazy month, actually. Wow. Yo, what up, Applesauce? Can we take a look at SoFi? Yeah, it's another one I own. We'll check them out. So SoFi, obviously, Fintech. So this one's at a new 52-week high today. A lot of the Fintechs are. SoFi's at a new 52-week, or SoFi's at an all-time high today. Futu's doing great. But yeah, SoFi, I do own this one, so I might be a little biased. But here's why I think they deserve to be at all-time highs today. Their student loan business is getting help from the government or whatever, but they're a fintech, obviously, and their financial services business has just seen incredible growth. I mean, here's their financial services. Look, the revenue is up 101% from the previous year. I mean, that is what I like to see. Like, if I'm going to put my money in a stock, I want to make sure the fundamentals are really growing. And for SoFi, it checks that box. And if we go to the net income right here, people are really starting to take them serious because they're making net income every quarter. Because if we zoom out, they used to lose net income every quarter. So people really take SoFi serious. And that's kind of the same story for Robinhood. Robinhood used to lose a boatload of money. Um, let's see. Soy said ASX. Is that what? Let me know which one you're talking about. Is it the Australian company or is it called ASE Technology? Let me know and we'll check it out. Greatest bull run in market history. Yo, Pinky, what's up, dude? Good to see you. You should have more in the S&P 500. I lost a lot of money in Bitcoin in S&P. Wait. And I'm up 20% year to date. Hey, that's awesome, Goat. You're up 20% year to date. Yeah, so if we go to this portfolio, we're up 8.6% year to date. That's still really good. If you're up 8% year to date, that's amazing. Because if you go to the S&P 500, which is like, this is what you want to try and beat. You want to just beat the S&P 500. And this is up 6% year to date. So we're actually doing a little bit better than the S&P 500 with my stock picking strategy. Yeah, if you're a stock picker and you individually pick stocks, you got to make sure you're outperforming the market. And also, y'all will like this. This is crazy. Year to date, yeah, in this portfolio right here, we're up 25% year to date. I just like being fully transparent. I mean, I got nothing to hide, obviously, because the market's been doing great. But if we go to all time, yeah, we're up 73% on a return money weighted basis all time. And the S&P is only up 49%. Yo, look, this is DCA. Look, I didn't realize I showed this. These are all my deposits, all those blue circles. That's when I deposit money. So anyway, let's keep going here. Let's get back to the stock analysis. What do you think about Nike? Ooh, so Nike, I don't like this one, to be honest with you. And I used to own them, actually. Check this out. Look, I sold all my Nike up here at $79. And you can see where I was buying Nike for the longest time. And their dividends at a really high risk right now. So that's the reason it's tough buying Nike. So they lost their growth. Nike's just lost all growth. If we look at the revenue is down 12% year over year. So revenue's down 12%. But look at the net income. It's down 85%. The net margins have collapsed. The net margin's only at 1.9%. And if you go to the EPS, it was 14 cents the most recent quarter. So they made 14 cents of EPS and the dividend cost 40 cents. So the dividend payout ratio is way too high for me to really trust Nike. But I like their brand though. Honestly, I'd rather buy an LVMUY. So this is Louis Vuitton, Moet Hennessy. It's just more brands in one. And this one also hasn't been doing too good. Look at that. But it's more of a luxury play. They own Louis Vuitton, or Dior. But I love the high margin industries that LVMH is in. Look at this. They're in watches and jewelry, perfume and cosmetics. Those got some high margins. Wine, spirits, So fashion and leather goods. I really like LVMUY, and they made $13 billion of net income for the full year. So hey, Applesauce said, is Rocket Lab is it worth taking a look at? So I think so. I wouldn't buy this one at all-time highs because Rocket Lab, it's tough just buying it at all-time highs, but they have a $1.5 billion backlog of orders, huge backlog of orders. They just acquired a company for $600 million, and the space systems revenue here has just seen really good growth. It's up 45% from the previous year, and the growth is going to be even higher after this acquisition. So I just really like that about Rocket Lab. I still would be a little careful. They are losing money, $50 million a quarter, but at this growth rate, they can kind of outgrow that thing here. So, let's see. Oh, ASE Technologies. Okay, cool. So ASE. Oh, wait, what was the ticker symbol again? No way, I forgot it. Okay, ASX. Okay, here we go. So this stock has kind of been flat for a couple years, flat since the beginning of 2024. Let's see. Oh, so look at where this revenue's currency comes from. So we're going to switch the revenue to USD just for simplicity. So let's see, net income right here. Yeah, hey, look at that. Good news. They're making a couple $100 million a quarter, $300 million nearly a quarter. And you're going to get a dividend, a 3% dividend. Payout ratio is a little high, 72% payout ratio, but still. What was the growth of the sales again? So sales were up 7%. So sales that's good growth, but the quarter before it was down 5%. So I think it's just a little bit of slowing growth is why the stock has been flat for a year. But still, I mean, they're still making a lot of net income. They're not a US-based company, though. We saw, I think they were from Taiwan or something. Yo, Brandon, no way, dude. Thank you so much for the 10 roses there, bro. If you got a stock I'm going to look at. Oh, he did. Let's see. Brandon said NUVB. Yeah, hey, thanks for the roses, dude. So NUVB. So let's see. So a bio. So I'm assuming this is a very small market cap. So yeah, I don't love these kind of stocks. Yeah, we look at Pepsi and AppLovin. In Main Street. I want to get to all these stocks here. But yeah, if we look in the top right, they're only a $755 million company. So that's what you got to be careful with. Oncology development. Let me see here. So they did have sales of 3 million the most recent quarter. How'd that do? So this is their first time ever having revenue. So this is for the past 4 quarters, they've never had money before that. Ooh, so this is bad news. They're losing a lot of money. They have a good balance sheet. Let's see, 460 million of cash. So they have a lot of cash on hand to afford this and no debt. So 460 million of cash, but they're losing 50 million a quarter and they're only worth 700 mil. So it's a mixed bag. I can see why this one hasn't done too good. It's tough. The financials aren't too great there. But it's not the end of the world. But I wouldn't put a lot of money in that one. I'd be careful. So let's see, PepsiCo. So yeah, Pepsi. This one is, I don't know why they've been struggling so much. I love their brands. Coca-Cola is pretty close to all-time highs, but this one isn't for some reason. But Pepsi, they have a nice yield here. So if you're looking for like a higher yielding play, check out Pepsi. 4.03% dividend here. They own Frito-Lay. I think just the slowing growth is why Pepsi's fallen. Let's see. So revenue, yeah, look, so revenue is down 1.8% year over year. And that's, like the lifeblood of the company. So sales are down nearly 2%, but they're still making, and the net income fell 10. So that means their margins fell a little. But so they're making 2-3 billion in net income a quarter. I trust Pepsi to keep the dividends safe. So Kevin said Main Street Capital. This one has been crushing it. I do own this one in my Roth IRA. This is one of my highest yielding dividend stocks. So I own this one in the Roth IRA because they don't pay a qualified dividend, but I own 10 shares of them. And the best part about this stock is they pay you a monthly dividend. So this little $2.50 payment I'm getting, they pay that every month. So that's what I really like about Main Street Capital. We're up 13% on them. So they've been really good to me. And they're a BDC, and BDCs, these companies have to pay out most of their income in the form of a dividend by law. So that's why there's this crazy 6.6% yield, 71% payout ratio, sustainable. So yeah, they don't pay a qualified dividend though. Yo, Jeff, what's up, dude? He said Meta stock. Dude, I love Meta, man. There's so many earnings tailwinds here. They just announced they're putting advertisements on WhatsApp. They've been trying to monetize WhatsApp for a long time. There's going to be ads on it now, which is great earnings tailwind for Meta. They also just acquired Scale AI, which is going to add over 300 million of revenue a quarter. They just acquired 3% of ESLOY, which is the parent company for Ray-Bans. Literally 2 days ago, I'll show you that real quick. Meta, literally 2 days ago, bought 3% of this stock right here. And they're a crazy market cap, $130 billion market cap, and 3% of that goes to Meta. Anyway, so they bought a stake in because they do the Meta Ray-Bans partnership, so it was kind of smart for Meta to buy some of the company if they're going to help them out so much. But anyway, and Threads, which is like a competitor to Twitter, Threads is nearing the exact same amount of daily active users as X, which is crazy. Anyway, yeah, if we go to their active users, Instagram, Facebook, they have 3.43 billion daily active users. I mean, that's nuts. And if we go to the net income, it's ridiculous. I can't believe this near $2 trillion company has 40% net margins. That's nuts. And if you go to the net income right here, it's crazy. I mean, they're making 15, 20 billion of net income a quarter, and it just grows. So anyway, I do like Meta. Is a small market cap bad? It's not bad, but it's just really risky. Like this is like just pretty true. Like the smaller the market cap, like the riskier it is. So CAT. So let's check this one out. So this is Caterpillar. I love this company actually. So they've had a crazy V-shaped recovery. Look at that. This was a 280. Now they're nearing 400. Or near 420 to an all-time high, which is crazy. So if we go to the dividend, yeah, even if you buy this stock right now, you get a 1.4% dividend. So you get a very nice dividend there. And look at the business breakdown. They're in energy and transportation. They're in construction. They're in resource. What's the PE? Yeah, a 19 PE. So this company trades at 19 times net income. Pretty fair. And if we go to the net income, look at that. They're making 2-3 billion in net income a quarter. So for Caterpillar, I do like this one as a dividend growth stock. The stock price appreciation has just been really good too. So let's see. XRP, this isn't a stock right here, but we don't really look at crypto. Well, there's nothing we can really look at on crypto because they don't report earnings, but that's also a cool, unique feature about crypto. Bitcoin, XRP, they don't have to worry about missing on their net margin or missing the sales or all that. So it's kind of a unique feature, but yeah, it's done great today. It's up 10%. I wonder if there was any specific news, but yeah, I wish I could give you more thoughts on XRP there. I do apologize. Um, all right, so let's see. Casey said, "Bro, what's happening to my NOK over the last couple of days?" Let's see. Nokia stock. Yeah, it looks like they're on a little downtrend right now. So this company, well, yeah, look at this. Nokia, the phone maker, they were huge. They're lower than they were in 1998, obviously. So, oh, yeah, well, look at Riot as well. So Nokia, where does the revenue come from? So only 26% of the revenue comes from the US. Then they're in Finland, India, and all these other countries. Anyway, mobile networks, cloud and network services. How's that doing? That's up 5%. What about this? Network infrastructure up 20. Well, let's see net income. So they've lost net income in the most recent quarter, and that was real. Yikes. So they lost net income, and it's just nothing's really blowing me away here to really want to. I'd rather probably just buy an Apple. Yeah, the sales are down 0.5% year over year. I'd probably rather buy an Apple or Google. Google makes their own phones. They're cool. So let's see. Spencer said Riot stock. So yeah, this is like your Bitcoin proxy right here. I believe this company just mines a bunch of Bitcoin. But look at this is the only like thing that sucks. Like Bitcoin is at all-time highs today. Bitcoin's at an all-time high, but this isn't. Riot platform is well off all-time highs. And basically, wait, let's see. Yeah, look at that. Proof for yourself. Look, 88% of the revenue comes from their Bitcoin mining business. So you want to go to the balance sheet for this one. They have no debt, lots of assets, and those assets are just Bitcoin. So I'd rather just own Bitcoin, to be honest with you. What app is this? Someone said, yeah, hey, G, if you want to get this app, it's actually a brokerage that I'm on here. Yeah, if you want to get this, I love all the analysis you can do. Go to the link tree in my bio. It's the very first link there to get this brokerage I'm on. It's free, and it's an affiliate link too, so I'd appreciate that. There was crypto. Where are the crypto? Crypto stocks. Okay, so if we go to the crypto stock watch list, MicroStrategy's, your main play. They own so much Bitcoin. Circle, and then there's Riot Platforms. Clean Spark owns a lot. So anyway, how have they done the past year? Wow, up 96% this watch list the past year, and the S&P is only up 11. So crypto's just done great this past year. So let's get back here. So Ben said CYBE, Cyber Catch. They joined the NVIDIA Inception program recently. So this is a Canadian company. Okay. Wow. Hey, look at that stock price appreciation. I mean, now that's pretty crazy. Okay. So this whole company is worth 93 million. So first off, extremely small company worth 90 million. They're a Canadian company, so we can switch the revenue to US dollars. But software as a service, yeah, the software revenue is 92,000, and they didn't lose much. I mean, they lost 100,000, but there's just no sales here. But obviously, more liabilities and assets. But there's this huge stock price appreciation recently. There's obviously some good news here. Maybe in the future, they're gonna have a lot of revenue. So I don't know. Just subscribe to your YouTube. Yo, Dexter, no way, dude. I really appreciate you, man. Yeah, thanks for subscribing to the YouTube channel. Yeah, hey, if y'all don't know, I'm streaming on both YouTube and TikTok right now. I'm reading both chats, but TikTok keeps taking down my account. Like literally, my account was just permanently banned for 2 weeks. Like my account didn't exist. I thought it was gone forever. Then a couple days ago, TikTok gave me notification saying your account is unbanned. So I'm so happy to be back on here. But in case anything happens, I'm also streaming on YouTube. Best way to support me, just subscribe to my YouTube channel. It's called Nathan Robert, link tree in bio. I don't sell anything. I don't have a course, a book. I'm literally just on here giving my opinion. So anyway, let's keep going here. So MSTY, please. That's the yield max ETF. So basically, you buy this to maximize your dividend income. You won't outperform the market in the long run, but this just sells calls on MicroStrategy, which is Bitcoin, and you get a lot of MSTY. Yeah, I think that's MicroStrategy. They just sell calls on Bitcoin. So Seabass said ASML analysis, please. I bought in at $7.99. Hey, so yeah, you're pretty much it's right at your cost basis. So hey, check that out. So someone bought ASML here. This is your chip making device like manufacturer right here. They have three main customers. It's Nvidia, it's Samsung, and I think Intel. I forget it. They have like three main customers. So they do have a bit of customer concentration, but they make like these lithography machines. They're crazy. And look at the growth here. Really good growth. Revenue's up 47% from the previous year. So revenue's up 47%. And look at this net income. It's up 93% to a new record. That's like a record net income last quarter. But if we go to the net margins right here, the margins are really growing. They have a 31% net margin, grew 31% year over year. Net income is off the chain here. So I really like ASML actually. I just took a shower. Hey, thanks for the info, James. What's up, dude? Nikki said ticker symbol PATH. Yo, I just like being fully transparent. Check this out. We go over here to my biggest losers right here. This is basically my biggest loser. I have one other big loser, ChargePoint, but I sold them. But anyway, here's UiPath right here. Basically, there was no earnings on this day. The stock fell like crazy because the CEO quit out of nowhere. The CEO literally just quit. It looked like a cash grab. It wasn't a great look for the company at all. Left management for dead and not good. And this company doesn't have any debt. I do like that. Let me actually go double check that. And I'll be really quick about this. So UiPath does $1.56 billion of cash. And yeah, look at that. Total debt says zero because they literally have no debt. Are they buying back their own stocks? Yeah, this is why I just am not selling out of the company. They're still buying back their own stock. They're spending like $200 million a quarter buying back their own stock, no debt, 1.5 billion of cash, which is wow, that's 20% of the market cap. So that's why I can't sell out of UiPath. Kind of same for Zoom. Literally over 50% of the Zoom's market cap is just their cash on hand. Earnings coming out soon. Hey, Seabass, no way, bro. Hopefully I'm saying your name right. Thanks for the roast there. I appreciate you, brother. He said MOAT stock. Wait, is that? Oh, the Van Eck or Morningstar Wide Moat ETF. Ticker symbol MOAT. So let's see, what are their top holdings? Estate Lauder. Wow. Boeing, Disney, Nike. Some of these other stocks I haven't heard before, but that's interesting. I wonder if does Nike and all these other companies actually have a wide moat? I don't know. Kramer was talking about Hinge Health says they have a lot of sticky contracts. Yo, Spencer, if you give me a ticker symbol for that stock, I'll check it out for you. Let's see here. User said, Nathan, can you check BITO, please? Is that this is like a Bitcoin proxy ETF, and it hasn't kept up with the price of Bitcoin because of the dividend. So if you buy this ETF right here, look at the dividend. You get a 49% dividend. I'm pretty sure this company just sells calls on Bitcoin because, as we know, we just looked at the price of Bitcoin. Bitcoin's at 115,000. It's at an all-time high. And here's this ProShares Bitcoin ETF. It's not at all-time highs. So that's because of the crazy dividend here. So you're basically buying this one for dividends. Hopefully that was helpful. Yeah, let's look at Estate Lauder. This is Michael Burry's only stock left. If you know the movie The Big Short, the thing it was based off of was Michael Burry, and this is the only stock he owns. Michael Burry sold every stock he owns except this one right here. Yo, Seabass, no way, brother. Thanks for the Let 'em Cook gift. I appreciate you, dude. If you got another stock you're gonna look at, I got you, man. So yeah, we'll look at HNGE and TANLA. What up, Tinku? Yeah, we'll check out all these stocks here. So here's Estate Lauder. This is a beauty and cosmetics company. And yeah, look at this. 50% of these are high margin industries. 50% of the revenue comes from skincare. Then they're in makeup, fragrances, high margin industries. But not so high margin because look at the net income. The quarters before this, look, they lost $500 million last quarter, then 100 million, but they did make 150 million in the most recent quarter. So we just want to see them keep that up, keep up this net income positivity. Sales fell 10% year over year. Not great, but they've had a nice little recovery here. So, and it's probably just like it was already so, there's no more sellers left. I mean, it's been on a downtrend for like 4 years. So, and it just can't go lower. Anyway, or it could, I mean, but of course, but okay. So let's see. Yeah, we'll look at HNGE. Then we'll look at DLO. Do not worry. We will check out DLO stock. And TANLA, I want to check that one out. If that's a stock, I don't know. This stock actually just IPO'd. If we zoom out, there's not much history because they literally just IPO'd. So I'm afraid we might not have too much data to look at. Yeah, so look at this. I wish I could give you more here, but the revenue we can see it's up 50% from the previous year. So that is really good growth. Revenue grew 50% and they made net income. So it's a net income positive company, but it's only one quarter of data this quarter and the same time last year. So Daniel Perez owns 20% of the business. Anyway, they're interesting. I wish I could give you more thoughts on them. TANLA. I don't know what that is. Is that a stock? TANLA. Yeah, I'm not finding that one. What up, Tinku? I can't find that one. You're not bullish on China anymore. Yo, what up, Spencer? So here's DLO, D local stock. So what's the market cap? They're pretty big actually, $3.1 billion company. Someone said charge your phone, the live's gonna be cut again. So oh shoot, yeah, hey, my phone's on 9%. Yo, we gotta hustle here. I really appreciate y'all. We're almost at the 2 hour mark on the stream. So I do appreciate y'all. Yeah, if y'all wanted the follow button, by the way, we go live every day, twice a day, and I sell nothing. I don't have a course, a book. I literally just give my opinion. And the only thing I want in return, like if you, my YouTube videos only get a couple hundred views. I just really appreciate you go watch some of my more recent YouTube videos. I'm trying to just build up my YouTube. Anyway, let's go look at D local right here. So, transaction revenue. So, not too sure. Well, look at the growth here. The transaction revenue is at a new record. It's up 17% year over year. I'm also streaming on YouTube, by the way. If you missed anything, you can rewatch it or replay it. And look at the net income. Wow, DLO is very profitable. I mean, look at that net income, 50 million the most recent quarter. It's like 50 mil a quarter, and it's growing. So that's actually very strong. The free cash flow is 90 million. What's the net margin? 20% plus net margin in the most recent quarter. I do wonder why the stock has been hurt so much. Where does the revenue come from? Market. So, oh, this is probably why. So look at this. That's why I like looking. 20% of the revenue comes from Brazil, then Mexico, then Egypt, Argentina, Chile. So notice it's not from the US or Canada. So it's like an international play there. Herman said Bitcoin. So BTC. So yeah, if we look at Bitcoin, wow, $117,000 on Bitcoin. Congrats if you've ever owned Bitcoin because, you're definitely up on your money. I wish I could give you more thoughts on them. They're doing so good right now because there's war. If there's war, inflation fear, dollar value, the dollar going down. I mean, Bitcoin and tariff fears. Bitcoin loves this stuff, and it goes up on it, kind of like gold. So, someone said, "What have you bought recently?" And hey, Kim, what app is this? Yeah, hey, this is actually a brokerage right here. If you want to get this app, I'm on, Kim. It's in the link tree in my bio, the very first link there. It's an affiliate link too, but it's free. It doesn't cost anything. It's why I love them. I love all the analysis you can do on here. And if you look in the middle of my screen, it's where I like to keep all my cash. Gets a little 4.10% APY. It's like I prefer it over like a high yield savings account. But anyway, here's Coca-Cola. Someone said, what's if you've been buying recently? Here's one stock I bought kind of 2 days ago, Coca-Cola consolidated. And you can see all these little buy orders. That's where that's every time I buy the stock. So I have been buying a little bit of Coca-Cola consolidated, but right now I am just chilling on quite a bit of cash because it is tough buying at all-time highs. Actually, there is one more other stock I bought, Progressive. Here, I'll show you this real quick. Where's my most? Yeah, so I just bought 2.4 shares of Progressive. I bought 5 T-Mobile and PSIX. Those aren't so recent though. Those are like the week or two ago purchases. And if you want to see why I bought those, go check out my YouTube channel. I'll go over why. Can you take a look at LAES? It's a quantum security stock. Yeah, I looked at this one and I don't like it. I don't believe, but let's go double check it again. So yeah, this is a very, very small company, $420 million market cap. So very small company. And you see this huge rally right here. They went from 35 cents to $11. They took advantage of this and they fortified their balance sheet. So besides this, I don't see any other value in this stock. But I mean, look at their balance sheet the most recent quarter. It just like huge revenue growth. I mean, incredible. Huge growth to their assets. And that's because they diluted the crap out of you. They diluted every shareholder by like 20%, which was genius. They needed to do that. It basically guarantees this company won't go bankrupt anymore. But yeah, they lost 20 mil. The revenue is nothing. For the full year 2024, the revenue was 11 million, and it fell 63% from the previous year. So I just don't see anything in this company. Maybe there's something I don't know, but they're just a small cap. Yeah, hey, no, don't worry about it, Applesauce. You don't need to be sorry. The only value, I think, like a good chunk of their market cap, yeah, like they're worth 450. They have like 80 million of cash and no debt. So it's just like their cash on hand. I don't know. All right, let's see. What brokerage firm is it? Yeah, hey, Fish Hooks. If you want to get it, it's in the link tree in my bio. First link there. It's called Moomoo. AMD on top. Hey, let's go look at AMD. Yeah, so I do own this one as well. I might be biased. This one has underperformed NVIDIA. Like if we go to NVIDIA stock, literally today, NVIDIA is at an all-time high. NVIDIA's at an all-time high, but AMD, look, is nowhere near all-time highs. But I still love this company, and I'll just show you the numbers. Like, look at this. They have a huge PC GPU market share, a 17% GPU market share for PC GPUs, which is great. But also, this is a huge data center play. Check this out. 50% of the revenue literally comes from data centers, and this revenue is up 58% from the previous year. So the growth is why I love AMD. They're just really growing the business, and not just top line, but the bottom line. Like FCF, which is free cash flow, the free cash flow is up 91% year over year, incredible. And also the net income, they're very profitable now. Net income's up 470, and look at this balance sheet, monster balance sheet, no net debt, or no debt at all basically. So I really like AMD, and I do own them. Hold on, I'll show you this real quick. AMD, I own them somewhere. Okay, yeah, hey, they've actually been doing pretty good. I'm up 17% on AMD, so not too shabby. All right, so check out the VNAM ETF. VNAM ETF. Global MSCI Vietnam ETF. So we just announced like tariffs on Vietnam. Nike. What the? I just heard like an alarm go off. Sorry. I don't know what that was. Anyway, VNAM, the Vietnam ETF. So these are obviously stocks we've probably never heard of before. Vietnam dairy products. Vietnam Property Bank. So this is a way to get exposure to that country, I guess. Hey. All right. Wayfair stock. What's the ticker symbol for Wayfair stock? Let's see. Jay said CLBR, I think. Is that what he said? CLBR? Let me know if this is the company you're talking about. I don't think it is, but maybe it is. It's at an all-time high today. They're worth $300 million. I think they're just like an asset manager. They just acquire companies. Yeah, no debt, lots of cash. I can't really give you any thoughts on that one. I apologize. Oh, PayPal. Hey, PayPal. This is a buyback machine, yo. And they've just seen some slowing growth recently. So if you're wondering, like, why is PayPal stock kind of flat on the past couple years, it's because they've just seen some slowing growth. Because PayPal should be paying a dividend right now. This is the kind of company that I predict will pay a dividend one day, but they should be right now. But instead, they're just returning all the money to buybacks. They should be a dividend payer, but the revenue growth is slow. Like the revenue is only up 1.1% year over year. So the revenue is only up 1.1% year over year. And look at this net income right here. This is the good news. The margins did go up a little bit, but the sales aren't growing as much. But here's the net income. They're making 1 to 1.3 billion of net income a quarter, which is good. The free cash flow is even better. Go to the free cash flow. Ooh, I didn't realize that the free cash flow did fall 45% year over year. So maybe they're investing heavily in the company. I don't know. But basically, PayPal is a big buyback play right now. All right, let's see. RELY stock. What's that one? Oh, wait, I wanted to look at Wayfair. Oh, it's just ticker symbol W. Okay, so let's check it out. So Wayfair, I think this is like the furniture company. I don't remember. Let me double check. Oh no, internet retail. Yeah, I don't remember. I think this just like sells like furniture. I don't know. Let's see how they're doing. So the sales are flat, up 0.04, and the net income, so they're losing like 100 million a quarter, but the trend is getting better, 55% better, and this balance sheet doesn't look good either. Nothing's really blowing me away here. So yeah, look at the revenue's not growing. I think this is a interest rate sensitive play. So if we go into a low interest rate environment, I think this one will have like a boom of sales. But they're losing like 50 to 100 million a quarter. They have twice as much liabilities as assets. Cash from operations is negative. I don't know about this one. At least right now, because they're losing money right now. But I think it's like a earnings or a interest rate sensitive tailwind play. All right. Let's see. ASTS. Yeah. So this one I don't really like. But they've done really good. I would prefer like a RKLB. But let's go look at AST Space Mobile. Let me reanalyze them because I don't know. Maybe they are good. I just remember them having literally no sales, and they're remember $15 billion company, and the sales were 700,000 in the most recent quarter. There's so many other better I know companies are like $5 billion market caps. I just can't pay this valuation. The valuation is ridiculous on this company. And they're losing. Look, they lost 60 million the most recent quarter, 50 million, 300 million, and they only have 700,000 of sales. I just there's some good news though. Like maybe they have these like some contracts that'll recognize in the future. That probably sounds right. Like they probably their future revenue will go up for sure. But I'm just being careful with ASTS Space Mobile. I don't think it's worth hyping into them right now. Well, let me reconnect my phone here. There we go. And my phone's getting, dang, we're on 4%. That must be why. Might need to go get the portable charger right here. Hey, we just hit basically the 2 hour mark. I really appreciate y'all being here. Hey, what up, Franco? He said, yo, Nathan, how's your Friday? Yo, my Friday's doing pretty good. How about you, my friend? Yeah, happy Friday, everyone. After this, I'm gonna get some Chick-fil-A. I've not eaten a single thing today, so finna hit up the Chick-fil-A after this. So someone said LIF stock. Yo, BT, what's up, dude? He said Life 360. Has anyone seen that app on the App Store? Life 360. They actually just went public pretty much exactly a year ago. So they just went public and they had this huge gap up on good earnings. Yeah, where is the? I hope. Oh no, I don't know if my portable charger is in here. That's not good. Also, there are no outlets. Why are there no outlets even close to me? Okay, actually, I can plug it into my computer, but it'll be okay. Anyway, Life 360 right here. Let's see the financials right here. So they beat on revenue. Whoa, they beat like crazy on net income. That might be why the stock gapped up so much. They were expected to lose net income, but then they made a bunch of net income. Yeah, EBIT as well. So yeah, they just made their net income positive now. This is really good actually. So um and really good balance sheet. This one's on my watch list as well. This one of the no debt stocks. There's a lot of similar companies. Like here's my debt free watch list. If you look at the top left, it says zero debt. These are all debt free companies. Like Duolingo is another stock kind of like them. They're another app store app. Pinterest has no debt. Zoom has no debt. Reddit as well. Yo, I do own some Reddit. I got four or five shares of Reddit. Yelp is another one. Anyway, let's see here. Look at IONQ. Yo, Don, let me know if you're still here. I got you. We'll look at IONQ after we look at RELY stock. Let me know if you want me to do that. We already looked at them a few times. They're a quantum play with I don't really see anything too good on them. But 3.5 besides the momentum, huge momentum on IONQ. But here's Remlity Global, $4 billion company. The stock's been struggling for the past couple years. Yeah, same price as they were back in 2022. So maybe we can find out why. This is going to be an uncomfortable hold for me to plug this in, but we're going to try. Okay. Phone is plugged in. Okay, let's see. So free cash flow, they are making a lot of free cash flow, 100 million of free cash flow in the most recent quarter, and they made 11 million of net income. That was real. So they're finally profitable. So look at that. The sales are up 35% and they made 11 million of net income. I mean, that's really good. The balance sheet, the asset to liability ratio is looking incredible. So I'll just say this, everything about the company at first glance looks incredible. So RELY, I would put that one on your watch list. Where's their revenue come from? Most of it comes from the US. They don't pay a dividend, so I do like RELY actually. All right, so ITRN. So this is, what is this one right here? So location and control. So a $780 million company, not too big of a market cap, $700 million market cap. But let's see how they're doing. So telematics services and telematics products, huh? So they're really profitable. Look at that. They're making 15 mil a quarter now and it's growing. So very profitable company. Yo, so the sales are only up 1%, but the net income's up 11. So that means they're growing their net margins. That's good news. Hey, Franco said, oh, that's awesome, dude. Franco says, it's from South Africa. What would you say about buying stock in any of Elon's companies, like Boring Company, Tesla? Yeah, and XAI or whatever. I wouldn't probably buy any of them. I mean, Tesla, it's tough buying at this valuation. I mean, yeah, we'll look at Tesla real quick. I don't think you can. I don't think Boring Company or XAI you can get exposure to. I just don't think it's possible. But for Tesla, though, you can get exposure to Tesla, but the valuation for me, I just stay away from this stock. Like there's other good names out there, and I just choose to go to the other good names because the valuation is really high. So they have 178 PE, so a really high valuation, which is okay if you're a high growth company. But Tesla kind of lost the growth. But the future growth that I think the PE is trying to price in is the growth of robo taxi network and robots. Because if we go to their total vehicles delivered, the total vehicles delivered are actually down 14% year over year on Tesla. It's like the deliveries by model and stuff. But if we go, yeah, so the automotive segment, which is the cars, that business is literally down 15% year over year. So it kind of lost the growth. And so did the margins. Because if we this is the worst part about Tesla, in my opinion. And again, it's going to get better in the future, obviously. But look, the revenue is down 9% year over year. So sales are down 9%. That's the lifeblood of the company. Sales are down 9, but the bottom line after tax net income was down 70%. So the margins are only at 2% on Tesla. The margins collapsed. So just when I analyze them from just a financials point of view, judging them how I would any other company, Tesla, I just couldn't trust any money in that company at this valuation. So much uncertainties, in my opinion. DVLT, what's this one? DVLT. So Data Vault AI. So the name sounds cool, but the stock's at an all-time low. Yeah, we don't really cover these kind of stocks on the channel. They're a $40 million company. So the whole company's worth 40 million and they lost 10 million in the most recent quarter. So yeah, you could buy this whole company for 40 million, get in at the 40 million valuation, but you're buying a company that literally lost 10 million in the past 3 months. And the sales were only 600,000. So they have a really good balance sheet. Whoa, how did they get such a good balance sheet? Wow, they only have 171,000 of cash left. Then what are those assets? I don't know. It's super risky. I'd be so careful with that one. I'd probably just stay away from that one. Yo, Lanny said PPA is a defense contract company. Let's find that one. PPA. Yo, then we'll look at OKLO. So let's see. Power shares. This is an ETF right here. So I don't know if this is what you're talking about. Let me see. Wait, PPA. Oh, this says Papa John's Pizza. Yeah, I think you might be talking about this ETF right here, Exchange Traded Fund. It's not an individual company, but look at the incredible stock price appreciation that it's had recently. It's at an all-time high today. Let's go see their top holdings. So the top holdings are all the aerospace names, of course. A Boeing, a GE Aerospace, a Raytheon, a Lockheed Martin, a Honeywell, Howmet Aerospace, dude, they've done incredible, I believe. Yeah, look at them. So, yeah, what's up, Franco? That's the only thing I have trouble with trying to put a lot of money in Tesla. In my opinion, stocks I'll show you what I literally just bought. Here are the stocks that I've most recently purchased. I just bought 2.4 shares of Progressive. It's like an insurance company. Maybe you've heard of them, like Flo, the mascot. T-Mobile, it's like a cell service provider. I love the valuation and the buybacks, the dividends on this company, the margin expansion. Everything looks great on T-Mobile. So I said, hey, why not buy some shares? So yeah, those are my most recent purchases. And also another most recent purchase, I bought some more Coca-Cola Consolidated. Just one more share a couple of days ago, but I love this company and the CEO. Oh wait, so hey, Keith, or I think his name, or Kiet, said OUST stock. Let's check it out. Now, sorry if I said your name wrong. Hey, yeah, we can look at Rio Tinto and Dogecoin. Yeah, we can check those out too. So here's Ouster stock. I don't think I've heard of them before, but look, they've had some very nice stock price appreciation recently. So yeah, congrats if you own them. Let's see, they're still a $1.2 billion company. Oh, well, oh my gosh. That, okay, I'm freaking out. Sorry. Something just grabbed my foot, and it was the charger. Oh my goodness. Hey, we're well over the 2-hour mark. I'm probably going to end the stream here in a little bit, but I do really appreciate y'all being here. If you want to hit the follow button, the subscribe button, we go live every day, sometimes twice a day. But yeah, look at this right here. They're still losing money every quarter. They're losing 20 million a quarter. Not the end of the world. The sales are up 25% year over year, but They do have a really good balance sheet. The balance sheet's really improving. So I do wonder if there was some like specific news right here. Like, why would the stock rally up so much? I don't think it was just pure momentum. Um, there must be some other good news. So hey, nice. Um, how do you know this so well? Hey, I don't think I do. I'm not an expert. I don't sell anything. I don't have a course, a book. I've just been analyzing stocks since I started investing the day I turned 18. Wait, someone said ALKT. ALKT. So alchemy, wait, alchemy technology. So let's check out this company, a $3 billion company. I wonder what they do. So if it would load here. Let's see. So they have a software. So software as a service, 95% of the revenue. All the revenue comes from the US. Let's see. Profitable? No. But they're getting really close to profitability. They're losing 7, 8 million a quarter. It's actually not too terrible. The revenue's up 30% year over year, but yeah. Um, they must have, did they just like acquire a company or something? Yeah, they did. So look, if you go to cash from investing activities, they just invested 400 million into a company. That's why their balance sheet like did that. So looks like there's some an acquisition that just happened over here. I wonder how that'll affect their future earnings. Hey, not bad. Oh yeah, let's look at Rio right here. My bad. This is Rio Tinto right here, and this is like a company that mines resources from the earth. Um, and I want to get it to load here. Yeah, hey, good thing we're at the end of the stream here. So Rio Tinto. So yeah, they also have a vast network of railroads. So but anyway, they just sell like copper, iron, typical commodities. They mine it from the ground and then sell it. And you get a nice dividend with this company. I think the dividend changes every quarter. Yeah, look at that. You get a 7.2% dividend. So very nice dividend on this company. I do believe they're not. Oh, yeah. So look at that. 55% of the revenue comes from iron ore. And they sell aluminum and copper and all these commodities. And look at that. So I didn't realize this. 60% of the revenue actually comes from China. So, and then the United States is 16%. So, hey, they just sell a bunch of commodities. They made for the full year 2024, they made 11.5 billion of net income in USD. So, hey, that's really strong. I think the dividend's safe on that one, in my opinion. Guma said ticker symbol pay. What is this one? And we can look at Newegg. And what up, Nathaniel? How's it going, dude? So here's Paymentus Holdings. So a $3.5 billion company. How's the revenue growth been doing? So let me go down here. So the revenue is up. Wow, that's insane growth, dude. The revenue is up 50% from the previous year. And if we go to the net income, they're profitable on that. They're making couple, yeah, a couple million a quarter, well over 10 million a quarter now. The growth rate is insane. So I really like Pay actually. They have a monster balance sheet. No debt on this company, bunch of cash. They're making net income every quarter. They're growing 50% year over year. I can see why you like that one, and I like that one too. Jeez. OKLO is a nuclear power company. Yeah, hell. Yeah, hey. Forgot. So Oklo right here, this is a startup actually. So this one has no revenue. I personally would rather buy like a VST or a CEG, maybe even a SO over this stock right here, just because they're a startup, but they're the main nuclear momentum name. Like whenever the nuclear stocks, uranium stocks are moving, they move a lot. But if you go to the revenue right here, you see how it says no data? That's because they've never sold anything. They've never sold a product or a service. They're still a startup, but they're backed by some famous people. So anyway, that's the only small critique I have is that they're literally a company with no revenue. Um, let's see. T Row. Hey, Stefan, I do own some T Row. This is an asset manager, and I love this one for the dividend. I just made a little video about T Row on my YouTube channel. I'm gonna tell you why I love T Row Price Group so much, and I do own them. As you can see, the little blue line. I got 6 shares of T Row Price Group at $90. And here's what's so great. If you look, they have a 4.99% dividend. So first off, you get a 5% dividend yield. Yo, no way, big boy. What's up, brother? Thanks for the little gift there. The Rose. If you got a stock you want me to look at, let me know. Man, did you see what happened? No, what happened? Anyway, so this company has a 5% dividend. Look at the net income. They're making easily 600 million of net income a quarter. So let's just say they make 500 million a quarter. Well, the 5% dividend only cost them 290 million. So they've literally have a 50% dividend payout ratio with $3 billion of cash. So they have $2.84 billion of cash and total debt of $44 million. I like to just call this no debt. I mean, the debt is $44 million. I mean, that's nothing. And since they have so much leftover money, they're buying back their own stock like crazy. T. Rowe just spent $200 million buying back their own stock and debt-free. Where's the balance sheet? Yeah, look at this balance sheet right here. Incredible. So anyway, I like T. Rowe as a higher yielding play. Yeah, I got a nice 5% yield on them. Let's see here. Yo, big boy, is that a ticker symbol? Did you say ticker symbol L or ticker symbol I? What is that one? Farrah said Shark Ninja. What is this stock? I don't think I've heard of them before. Ticker symbol SN, Shark Ninja. So is this the blender company? This might be actually. So let's see. So yeah, look, cleaning appliances, cooking and beverage, food preparation. So this is like, if you heard of Shark or Ninja Blender, I think this is it. So yeah, look, they just sell a commodity, but look, wow, they're printing money. I mean, over 100 mil a quarter at this point. I mean, geez, how is Shark Ninja making so much? Oh, they have like an 11% margin here, but hey, that's really interesting, actually. Do they pay a dividend? No dividend. I mean, no real reason to, but look at the stock price. The stock price was just like at an all-time high. Jeez. Joby, if you have the time. Yo, Joby Aviation, I don't think this one has any revenue. Or they have like a bunch of contracts that'll recognize in the future. But yeah, the stock is at an all-time high right now. Or no, not all-time high, but like a 52-week high today. So yeah, first off, congrats if you own them. So yeah, flight services is where all the revenue comes from. What is the revenue though? So, please. It doesn't want to load the revenue, but they lost 82 million of net income in the most recent quarter. Man, we'll look at okay, yeah, we'll look at CLS as well. So yeah, look at this. That is not good. So the revenue was 55,000 in the most recent quarter. So company lost 82 mil. Sales were, they just have no sales on this company, but I think it's like future contracts that are recognized. But yeah, there's no revenues on the company, but the stock's doing really good. So that's good news. So let's go look at or CLS right here. So, or wait, CLS. Yeah, CLS. So this is, Celestica. I think they're a Canadian company. And look, the stock's at an all-time high. So kind of like the S&P 500. So yeah, congrats if you own this one. Let's see how they're doing. So connectivity and cloud solutions, that's a booming business. And look, the revenue's up 30% year over year. Oh shoot. Okay, the mic's good now. Sorry. Yeah, the revenue is up 27% from the previous year. So really good growth right there. And if we go to the net income, yeah, look at that. They're profitable as well. They're making like 90 to 100 million of net income every quarter. So I like the profits here. The growth of the sales is nice. So yeah, I can see why they're at all-time highs. And hey, big boy, thanks again for all the gifts there. Oh, he sent 3, thanks for the 3 vote thing, the arrows. I appreciate that, brother. Pepsi for the long term. Yeah, dude, Pepsi got a nice 4% dividend on that one. LTH Lifetime Fitness. Yeah, dude, we used to have before we moved here, we had a lifetime subscription. We went to their gym. It was so nice. There's like a food court in there. You get snacks and foods and health bars or whatever. But the gym business is actually surprisingly really good because people just forget to cancel their subscription. And if we go to the net income right here, yeah, look at this. In net income, they made 80 million the most recent quarter, and it tripled. It's up 205% year over year. So very good net income growth on Lifetime Fitness. Another one is PLNT, Planet Fitness. This company's strategy is to go out of their way. They find the people that they don't have good equipment like you would at any other place. So Planet Fitness finds people that they know really aren't going to go to the gym and just milks their monthly subscriptions. Look at, wow, all-time high on Planet Fitness today. Yeah, I guess the gyms are doing good. But yeah, anyway, I do really appreciate y'all being here. I gotta go. But I hope you have a great rest of your day. If you wanted the follow button, we go live every day, twice a day. And main way to support me, like I would rather you go subscribe to my YouTube channel and like donate $1. Like the best way to support me is go subscribe to my YouTube channel, go watch my most recent YouTube video. My YouTube videos don't get many views, like 200-300 views of videos. So I'm trying to build on my YouTube channel. So if you want to help me out, go subscribe over there. And I hope you have a great rest of your day. Yeah, we'll be live. I think I'll do a late night live stream tonight. Hey, Applesauce, thanks, brother. B-Taj, thank you all. Soy for being here. I really appreciate y'all. So hope you have a great rest of your day. We'll be live tomorrow and the next day. I love the Sunday lives. The Sunday live streams are like our most popular ones. So anyway, see you later. And thank you all for y'all on the YouTube stream. Hope you have a great rest of your day. Thanks again.